Particular because the pressure is coming through here, pointing lower by 0.6, 0.4 of a between 0.4 and 0.5%, down about 60 points. Basic resources is going to be key to this, given the pressure that's coming through for iron ore and copper, but energy as well. So look at those sectors. DAX futures flat. CAC current is looking to losses of around 0.3%, dropping so far 19 points or so. Kriti.
So it's that risk sentiment here that's going to flow into the broader commodity picture. I want to bring you the GMM here as we are waiting for those markets to open, of course, across Europe. But really look at the commodity story here, because we talked about oil earlier and the idea that it's down in line with risk sentiment. So is the entire commodity sector. Take a look at this. Now, there are going to be some fundamental narratives, but this entire column right here, from gas to nat gas to Brent crude, even to NYMEX, really trading on this idea that perhaps people are souring around risk sentiment right now. That's a really interesting dynamic because it's flowing into some of the European currencies as well. The idea here that the dollar is actually stronger. So the risk-off sentiment truly a cross-asset story. Bloomberg dollar index higher by 0.2%. Some weakness in the pound, the euro, even the Swiss franc there. So again, speaking to that risk sentiment, as we start to see the European markets open, the FTSE 100 down about 0.5% there, and the France as well down about 0.2%. Where you are seeing some of the more peripheral markets, Italy, Spain, for example, virtually unchanged, but I wonder if that worsens as we start to see more and more stocks open. Tom?
Let's check in on these sectors then. Just two sectors across the 12 main sectors that we reflect on. They're in positive territory. Banks by 0.2. And the pressure, as we've been flagging for the last hour and a half, coming through for basic resources and energy. Basic resources down 1.2%. Iron ore under pressure on a build-out of inventories and concerns about soft demand in China. Oil, of course, under pressure as well. 2 straight months now of losses for oil, and energy as a sector currently down 1%. That's a turnaround, by the way, from what happened on the session in Friday in Europe, where you saw gains of almost 4% and around 4% for the basic resources sector. So pairing that upside on the pressure that's coming through from iron ore. Across the other sectors that we're looking at, it's worth reflecting what's happening in technology, given the run-up we've seen in terms of the bond market rally. But yields, of course, ticking up across the US curve a little bit today. Technology as a sector, just down about 0.1%. Autos, a little bit of a drag maybe for the DAX coming through as a sector, down 0.2%. But really the standouts are energy and basic resources so far. This DAX print is not reflecting what's happening today. This is still from the close on Friday. Across the benchmark, you're seeing losses of 0.2%. Here in the UK, back below 7,500, a drop of 0.5%. Kriti.
Yeah, a lot to watch in both the sector story and, of course, the broader markets, which brings us to our real resident expert on it. Sam Unstead joins us from our Markets Today blog. Sam, all it feels like anyone's talking about in terms of the bigger market moves is what's going on with gold. You tell us, what's up there?
Yeah, I mean, that is a really good question, actually. And you kind of alluded to that earlier when you said that, you know, gold and Bitcoin both going higher. It feels like there's a kind of a settling going on today. You know, you had Powell's comments late on Friday. As Thomas mentioned, all these commodity moves as well. All of that is all kind of baking into the market today. And gold does still appear to be catching. So it got that kind of safe haven demand earlier in the year. Now the yield stories are feeding into it too. Hit a record a little bit earlier today. Feels as though the gold story is sort of stabilizing around that higher level.
Sam, how are you thinking about the Bitcoin story then? This is something that Kriti was talking about at the top of the 7 hour. But I just wonder if it's a warning flag, a red flag about over-enthusiasm as people search for yield, search for these assets. Maybe a little overconfidence, or is it those structural factors more at play here?
I think it's a combination, but I do think the structural factors are really what's driving it. So the ETFs, there's this kind of growing acceptance of Bitcoin. There's more liquidity that can come into the market. The halving, this kind of structural change that happens where effectively the supply is cut, and that kind of keeps the price higher. But there is, a degree to it where it is also risk. There's there's risk appetite, and there is, I suppose, in some ways at the moment, no better reading of risk appetite than where Bitcoin is.
Well, it feels like risk appetite, to your point, even though souring today, when you look at the cross-asset story, perhaps a little bit higher. Is that going to be a reversal of what we see going into the next couple of weeks as people kind of maybe tip off their hats to the season?
Yeah, that's another really good question, actually, because I think, so the S&P 500, there's a really nice story on the terminal over the weekend, that the kind of enthusiasm behind these moves in the S&P, which have still been relatively strong over the year, haven't been quite as exuberant. And so as you go into December, there's less leeway to fall. There's less exuberance to take out of the market. The question, I think, more turns to 2024. What do we see for that year? And the picture economically is not very strong. There's still a lot of debate about where rates are going to go. Until we start seeing those rate cuts start to come through next year, we may see a little bit of kind of stagnation, I suppose, within stock markets and maybe in all risk assets.
Okay, Sam Umstead, thank you as ever. Of course, from our Markets Today blog, you can get more from Sam, the rest of the team on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal. Coming up, Roche shares rise as the company acquires obesity drug maker Carmot Therapeutics. Yes, the obesity trend around the pharma space continues now with deal making. We'll get the details and a look at your stocks on the move with Joe Easton. That is next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
This is Markets Today. Happy Monday. We're currently 7-8 minutes into your European trading day. You're down across the European benchmark by close to 0.2%. US futures also pointing lower, 0.3%. Let's get more, though, on the individual stocks on the move. Bring in Joe Easton from our equities team. Joe, what is popping out to you this morning?
So we've got Roche shares rising around 2% at the moment over in Zurich on this news that they've bought Carmot Therapeutics in the US for around $2.7 billion. Now, this is, of course, in the obesity drug space, and we are seeing some weakness, therefore, in Novo Nordisk, the maker of Wegovy, and Ozempic as well. That was down around 1.5%, coming up a bit now, down 0.8%. on those competition worries for those drugs. Now, one of the big gainers in the UK is 888. The Sunday Times reporting at the weekend that they rejected a takeover approach at more than double where the stock is currently trading. That was back in July, so some people potentially hoping that that one will renew, and that stock's up around 11%, and the reported bidding company Playtech falling around 3%. That would be a big payout for them, worth around £700 million, according to the reports. We're seeing some clear movement on those gambling stocks today. The stakes are high on that one, I think. Now, Rolls-Royce upgraded at JP Morgan. They haven't been overweight this stock for 10 years almost. 2014, early 2014, the last time they recommended you buy that one. Now, there are 13 analysts with buy ratings on Rolls-Royce, given the demand for jet engines at the moment. Rolls is on a roll. IMCD, now this one is underweight at JP Morgan. It is the chemicals company over in Amsterdam. There's weakness in pharmaceuticals and also agriculture, that kind of thing. So that is the reason for that one, according to the analysts there. Wizz Air is cut to sell over at Deutsche Bank. They are heavily exposed to the Middle East and also seeing some weakness in some of the Eastern European markets that they serve at the moment. So Wizz Air slipping slightly at the moment. And one stock to note on the gainers is Wolters Kluwer. This is also Dutch, and it is in the IT space, corporate IT, accounting, that kind of thing, being added to the Euro Stoxx 50 according to the latest rebalancing on that index. The company coming out also in gambling is Flutter. That's the worst performing stock today, down around 4%, but Wolters Kluwer jumping on that unexpected addition, promotion to the index. In terms of Glencore, we get a downgrade for them over at Barclays. They go equal weight. Pretty interesting timing, given that there is a bit of a rebound in some of the Chinese data that we saw last week in manufacturing. That did boost a lot of those stocks, are potentially a little bit contrarian there. Swiss Life has a new CEO. The long-term CEO is retiring from them. The CFO gets the job. Tough act to follow. He's been in that position for 10 years, the current CEO. Petrofac in London, energy services. This one is getting hit on cash worries, capital raise potentially for them. And finally, ITM Power, the smaller UK utility, has a trading update. Not as bad as feared, and that one gaining around 6%.
Joe Easton from our equities team walking us through the stocks we need to know about this morning. We thank you for bringing us that crucial update. In the meantime, you kind of zoom out and look at the macro story. Risk sentiment is souring, and really around the world. You saw it in Asian markets. You're seeing it in European markets at the open as well. I wonder if it'll flow into the U.S. session as well. Let's get a little bit more context on the equity story. Joining us now, Ben Guttridge, portfolio manager, at Invesco Multi-Asset Strategies. We thank you for joining us this morning. Talk to us a little bit about the stock market. Yes, we're seeing red on the screen today, but that has been in quite the contrast to the 9% gain, at least in the equity market in the United States, we've seen in the last month. Is this what a soft landing looks like?
Well, it has been a pretty impressive recovery, hasn't it, since those sort of post-summer blues, and November was much welcome relief. And I think, this is what a soft landing would look like, and as the data continues to come through, and I would suggest continue to support the disinflationary narrative, then, I think markets can make yet more gains. Now, I'm not saying for certain, in fact, we would caution against the idea that a soft landing is going to be the ultimate outcome, but the route to, I guess in the end, like a recession, the route to it would be sort of slower growth and slower inflation anyway. So I think that type of mix can continue to support markets for a few quarters to come, yeah.
So, Ben, you think there's further upside to these equity markets? You lean into that, even if you're a bit cautious about the soft landing view. Where does that take you then, Ben?
Well, look, I think the US equity trade has been a really powerful and rewarding one. But look,
are you worried about the lack of breadth?
Well, I haven't been, because it's been nice for us. So it hasn't been a backward-looking worry. But going forward, I think the narrowness suggests the economic picture isn't entirely healthy, and I think it's well understood that the interest rate hikes that we've seen perhaps are taking a little bit longer to bite into the economy than anticipated. So, look, recessionary risks, I think, are material for next year. But between now and then, with the disinflationary backdrop, rate hikes in the rearview mirror, stock markets, I think, can continue to perform well. But taking some out of that US equity position, in part because of the narrowness, the valuation challenges there, and looking for opportunities elsewhere.
Well, tech bulls would say if you waited for valuations, you'd miss out on really big IPOs like Facebook, for example. But talk us through the idea of what the bear case for the U.S. actually looks like here. And I would argue equities broadly. If we're talking about a recession that hits the market or hits the economy at some point, don't you just buy American to hedge against that as the safe play? If you see rate cuts, don't you, again, buy American equities? Isn't that the bull case either way?
Well, I would agree. And in fact, our most sort of substantive position remains the US. I think in a slower growth, recessionary environment, there is some relative comfort from being in dollar assets and the higher quality US businesses. But look, I think the valuation extreme does, to a degree, threaten that narrative, but also on the bearish side, heaven forbid you get a repeat of 2022 and you get a reflationary type surge, from the commodity markets, perhaps the oil markets might deliver something of that kind, and then interest rate hikes may be back on the table. US equities could suffer, materially given where valuations are. So there's certainly risks to that US equity story, and they've been focused based on their outperformance for us to take a closer look at.
Would you argue that the 2022 carnage that you saw in the equity market globally, truly, was pricing in the rate hikes? Was that all there was to it?
Well, I think, there was, the rate hikes, therefore, giving rise to a more material recession, a more imminent recession as well. Sort of inflationary concerns morph into deflationary ones, don't they, in time, due to sort of central bank response mechanisms. But valuation would have played a part. US assets continue to, and have been for a long time, valued at a premium. So that always remains a sort of a technical short-term threat for that part of the global stock market.
Where you're certainly not getting a premium in terms of valuations is here in the UK. The FTSE 100 gaining just 0.7%. year to date. It's been pathetic, the outperformance, the underperformance, I should say, of UK assets, and small caps, of course, have fared no better. But you're starting to warm up to the UK, Ben. Why?
Well, as you say, there is a valuation story or imply. It hasn't participated so much this year. Perhaps that valuation story is the gift that never gives. But, we think, we have to take a look there. Certainly there is the energy markets, as I sort of referred to earlier. A risk to the US trade is that energy markets, the oil markets, come back strongly, and, the UK equities are a decent hedge against that. I know it's sort of understood that the economy is not in sort of great shape, but you look how sort of, pub companies, Mitchells and Buttler or Premier Inn, Whitbread are sort of communicating performance. Maybe the UK economy is not in such bad shape. Your reaction suggests you're not entirely aligned with me on that, but
I'm just looking at your face, Ben. You're trying to make the case. You're trying to make the case for the UK. The energy component, as we see Brent below $80 a barrel, no conviction that OPEC Plus can really support energy. China has not come through with demand. Inventories are building up. Yeah. So I guess skepticism, right? But I can see you're looking for it. You want to add that exposure, but you're cautious.
Yeah, look, investing's not easy. It's a difficult discipline, and sometimes the most rewarding trades are the most difficult to make. Buying opportunities never really feel like them. But as I say, the geopolitical challenges that present, maybe there is an underestimation to what sort of should be in the oil price, and the UK equities can offer a bit of a hedge against that. Maybe there's a bit more tech in the market than we all give thanks for as well. Think about Next or Pearson, these sort of digital tech platform plays. So, there are reasons, if you look hard enough, to believe there could be a rewarding trade on offer there.
Investing is never easy. That's why Tom and I stand on this side of the podium. Walk us through, you keep saying valuation is the bear case, both in the US story and the UK story. What is the red flag there? What metric are you using? What value are you looking for?
Well, we would think about the bear case for both those markets would be the resurgence of inflationary pressure. We are looking at the inflationary backdrop and thinking, you know, if you think about sort of the goods, services and shelter component that are driving inflation, that shelter component should, we believe, continue to bring inflation down.
In terms of PE ratio, for example, give us a PE ratio that screams red flag to you.
Well, for the US market, I guess it would be low 20s. For the UK market, it would be mid teens. So there's room to go for there. And of course, you know, it's not our base case, but you know, end of cycle like mentality. You know, investors scrambling for growth wherever they can perceive it to be. You know, US equity markets could run extremely hot, particularly if it's combined with, you know, either an idea of sort of a soft landing narrative as well. So there is, you know, valuations are offer flags, as you say, but they wouldn't necessarily cast the final sort of stone in terms of us pivoting to do a defensive position.
Okay, Ben, thank you very much indeed. Relatively constructive on these equities markets, maybe with the UK in there as a hedge. Ben Gutteridge, portfolio manager at Invesco Multi-Asset Strategies. We're going to be back in Dubai just in the next couple of minutes at COP28 with more guests and more interviews. Stay with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Names in global leadership are on Bloomberg.
What we've just delivered are significant tax cuts. For business, we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. That's an incredibly generous regime to attract business investment.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
This is Markets Today. We're about 22 minutes into the European trading day, seeing a little bit of risk sentiment kind of sour here, Tom. But again, no major conviction, either positive or negative. It's something I think is kind of ripple effects across assets.
Okay, let's get back to what is happening at COP28 in Dubai and the Bloomberg Green Festival. Francine Lacroix is speaking with Princess Lamia Al Saud, the Secretary General of Al Walid's Philanthropies, about the role of philanthropy in climate action and the power of women to drive change. Let's listen in.
You need to make sure that you have the buy-in for the government so they move on and they keep it sustainable, because this is one of the main criteria for our project.
Can you talk to us maybe about something, you know, a personal project that was close to your heart, where you've seen real success, so that other philanthropists also in the room can take away some of the key findings and how they can go and do good?
So I'll give you two projects, one on the local level, the domestic level, Saudi level, and I'll give you one on the international level. The Saudi level, in 2014, it wasn't that open and it wasn't that welcome to talk about legal women's rights in Saudi Arabia. So we had this project to create awareness about women's legal rights. And it was literally a kind of impossible to have the freedom to talk to women and, you know, to educate them, tell them on the Constitution they have rights and everything. And it was really a very tough thing to do. But we kept it going. It's not only we kept it going and it started evaluating. We start training lawyers, female lawyers to practice. Now we have 800 lawyers. It started evolving. Now we train on human rights laws. We have 600 of them are very well trained on human rights laws. Now they're working with the national security, and now it's a kind of a governmental project because now they're trained on the information law or the privacy of information. So this is one project in Saudi Arabia. The very much project that I'm extremely proud of is the Nubian Vault. Nubian Vault is a project that we work on in Sub-Saharan Africa. They're using natural resources to build, it's a green building, and it's a green jobs core. We're training masons. Till now, I think we finalized over 7,000 units, houses, and we trained over 600 masons. So I'm very proud of them, honestly. And by the way, Nubian Vault, we have been supporting them for 10 years now.
And how do you work with governments? Again, if a government says, no, or I'm not interested, and I hear this from a lot of philanthropists, they say, you're always going to face obstacles. It's how you face those obstacles and try and work around it. Is there a secret sauce in trying to?
It's always agreed from the beginning.
So that
always agreed from the don't have the buy-in after. No, it's always
make sure you
and we have a very good, putting in mind that our chairman is one of the biggest businessmen in the world. So I believe this has helped because there is, you know, a mutual benefit. Not in each and every situation, but I would say it helps a lot. It helps a lot get us in.
How would you accelerate the mitigation of climate change right now? When you look at COP, I guess we've seen some achievements, but we could go a lot further. How do you see it through the lens of the community that you try and serve?
I would say it differs from a community to another. I believe, as we talked, I think we have a lot of lost opportunities that we can deliver messages more clear and more accurate. I believe we need to empower this generation. I believe we need to clarify that you can have an individual action and it will be counted as an action to help your planet. We need to create an awareness about it's not only the big boys and the big players have to go into this game and conquer. No, each one of us can have the role, but we go back to talking their language, to understand, to respect their mentality, and to deliver the message their way, not ours.
Which is how a lot of times when you speak to,
Francine Lockwood, they're moderating a panel at the Bloomberg Green Festival. Plenty more content coming from COP28. Coming up, we'll speak with Michael S. Regan, the administrator of the U.S. Environmental Protection Agency. Do not miss that interview live from the COP28 Climate Summit in Dubai. Coming up next on the program, this is Bloomberg.
geopolitics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it.
Who's in a bad mood about being conservative? Is that because you feel like populism has taken control of your party?
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that
it.
Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg. Context changes everything.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching.
You do not want to miss this
He's
story.
there, the kind of upside.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Markets Today. We are about 30 minutes into the European trading day. Let's get to our top stories. Gold jumps to a fresh record with Bitcoin surging. Investors looking for yield as expectations of rate cuts grow around the world. And COP controversy, newly reported comments by the president of the climate summit throwing cold water on a potential commitment to phase out fossil fuels altogether. We're live from the event with interviews with the CEO of Adani Green Energy, as well as the president of the World Bank. Plus in the markets, Roche agrees to buy obesity drug maker Carmot Therapeutics in a deal that could eventually push the company into competition with rival Novo Nordisk. We'll have all the coverage right here on Markets Today. Tom, in the meantime, it's kind of sanguine when it comes to the macro story.
Yeah, it seems like you're consolidating across these equity markets, on pause at least, given what we saw in terms of the run-up of last week, both, of course, in the bond markets and the equity markets. Still, you are reflecting on the fact that last week, you had about 40 basis points in terms of the move lower in terms of yields at the front end. That reversing a bit then in the session today. So US Treasury yields are higher. Bonds are being sold off in Europe as well. So a bit of a pause. We've got data coming out of the Eurozone later this week in terms of PMIs. And then, of course, you have non-farm payrolls on Friday. Next week is that meeting from the Federal Reserve. So it makes sense on many levels for these markets to consolidate ahead of that data and ahead of that meeting. Across your benchmark here in Europe, you are flat then. Again, after the gains of Friday. The DAX, though, adding 0.2%, up 30 points. The DAX is having a relatively good session so far this Monday. The FTSE 100 in very different territory, being weighed down by what's happening in terms of basic resources and energy, losing 20 points, down 0.3% at 7,500. Still holding at that 7,500 level. And as we're reflecting with Ben Guthrie of Invesco earlier, year to date, the FTSE 100 is up just 0.7%. Let's have a look at the sectors then, and it is basic resources and energy that will jump out to you. It's worth reflecting as well on the fact that some of the gambling stocks in the UK are also proving something of a drag, including the likes of Flutter. Basic resources down 1.7%. Iron ore, copper, both under pressure. Inventory build out and softer demand seem to be the dynamics there. Energy down again on terms of softer oil prices. There's not much conviction that the cuts that came through from OPEC Plus are really to do much to put a floor under prices, at least get them back above $80 a barrel. Energy then down 1.4%. Gas is also off as well. So good news, at least as we look to the winter months for Europe. But the reason why gas is lower is because concerns about the ability for the European economy to revive itself. Across the sectors where you're seeing some green on the screen, health is up 0.3%. You're also seeing banks adding around 0.2%, food up 0.3%. Across your benchmark, flat. Gains in the DAX, 0.2%. Different picture here in the UK. FTSE 100 down 0.3%. So far this Monday, pretty.
Yeah, a really interesting dynamic. We'll see how it plays out for the rest of the week. So that is your market story. Let's get back to COP28. Activists and observers at the summit in Dubai have condemned controversial comments from the summit. President Sultan Al Jaber is reported to have said the science does not support calls for the total phasing out of fossil fuels to keep global temperature rises to 1.5 degrees. Now, COP28 officials say that the story is an attempt to undermine Al Jaber, who also heads up the UAE-owned Abu Dhabi National Oil Company. Let's go now to Bloomberg's Yusuf Gamal El-Din, who was at the climate conference and joined with a guest.
I mean, we had an EU view earlier, then we got a view from the United Arab Emirates. I now want to bring in Michael Regan, the administrator of the U.S. Environment Protection Agency. Michael, the absence of the U.S. president is something that, of course, everybody took note of. But in terms of how serious the U.S. is on climate, you look at the Inflation Reduction Act, or be it some of the regulations that you're working on, those could get repealed, those could get changed by a future administration. What do you tell foreign ministers who are worried that these things are going to happen and the U.S. doesn't live up to its promises?
Well, first of all, I'll say since COP26, President Biden declared America's back. We're back on the international stage, focused on leading in the climate field. I think when you look at the investments from the Inflation Reduction Act, which have already started, those dollars are being invested in communities all across the country. Red, blue, independent, those resources are beginning to make a difference in real ways with real people. And so that, coupled with these very aggressive technology standards that we're producing and promoting that has industry buy-in, will make it extremely difficult for anyone to just come in and unwind it. They're economically beneficial, they're creating jobs, and more importantly, we're balancing, reducing these climate pollutants and protecting the planet while we're protecting people.
One of the initiatives that you've pushed forward is the super emitter program. You're bringing in private citizens. How is that going to shift the landscape in the U.S.?
Well, listen, it shifts it greatly. And here's the reality. There are nonprofit organizations and others who are spending considerable resources in satellite technology and transparency. So this technology standard that we've proposed, which, by the way, will reduce 80% of methane emissions by 2038. This is a significant number. This is also reducing the loss of a lot of product, right? So we're saving emissions, we're saving product. It's good for business. The technology innovation that's a part of this is the future. So this is the way to go. Increase the performance of technology to reduce emissions, increase the participation and partnership with business and our communities. This is a win-win-win.
In terms of the other sets of regulations that you're working on, one is on targeting carbon pollution from power plants, and the other one is on tailpipe emissions. Now, how are you going to get this done in time without sacrificing sort of the substance, the quality of the legislation?
Well, here's the deal. We've been working with industry from day one, which is how we were so successful with this finalization of this methane technology standard. We'll continue to work with the auto industry. We'll continue to work with the power sector industry. By the way, we've had some very productive conversations. And the reality is the market is driving in this direction. Technology is driving in this direction. And we're now just aligning all of these goals to keep that planet to keep the planet from warming beyond that 1.5 degree Celsius range, and continue to create jobs and encourage the economy to grow.
I mean, here's the thing. I look at the emissions from agriculture. Those need to be slashed as well. Refineries, steel plants, industrial facilities. When is the EPA going to take action on some of those fronts?
Well, listen, I have to say that we've been in office for three years now, going on 3 years. The previous administration did not tackle these topics, so the list was long. What we've done is we've prioritized those that we believe have the most impact on the climate. And so we've tackled HFCs successfully. We've tackled methane. Now it's time to tackle cars and trucks and heavy-duty vehicles and power plants. Once we tackle those, then we'll begin to turn to other priorities that we have. Listen, we know that the job is not done yet, and we'll keep doing that.
What about agriculture emissions then? Is that a low priority, or are you just being strategic about it?
No, as a matter of fact, when it comes to looking at carbon solutions for our agricultural industry, EPA and our United States Department of Agriculture is focused on a lot of carbon reducing metrics. Many of those are voluntary. Some are in the regulatory space. So listen, we're walking and chewing gum at the same time, and we're getting it done.
One of the goals is to get sales of cars to be EVs 2 out of 3 by 2032. Now, there's a little bit of a pushback, and people are asking, well, aren't you interfering with the open choices that consumers should be willing to make in the United States?
Well, listen, I think the president pledged that we would, pursue a path of at least 50% of new vehicle sales by 2030. I, like many Americans, watched the Super Bowl and watched these car companies run million-dollar ads that explain to their customers that the future is electric, and their customers are responding by purchasing these vehicles. So I think we're in perfect alignment with where the technology is, where the businesses are going. We need to be able to have some rules of the road that can lock in some certainty for long-term investments.
We'll leave it there. Thank you very much for that. It's been a real pleasure. That's Michael S. Regan, the Administrator of the U.S. Environment Protection Agency. Kriti, Tom?
Yusuf, thank you very much indeed. Bloomberg's Yusuf Gamal Adin, of course, at COP28 in Dubai. Now, out of Dubai as well, Bill Gates saying that the world probably will not meet the Paris Agreement's goal of keeping the rise in global temperature below 2 degrees Celsius. He spoke with Bloomberg's Francine Lacqua on the sidelines of COP28.
No, we won't hit the aspirational targets. Well, you can do the math on 1.5, and even 2.0 isn't that likely. Now, fortunately, if you stay below 3, a lot of the ill effects that people have heard about don't happen unless you really are irresponsible and let it get up to the higher range.
I mean, many people say it's innovation, but it's also with making sure that we don't waste energy in the things that we have now. How are we doing on that? Like, again, if you see all of the different components to trying to stick to the Paris Agreement, is there any low-hanging fruit that we should be thinking about?
Well, there's lots of things in energy efficiency, but that's primarily, in rich countries where energy's been so cheap that, we leave the lights on at night, we construct things where you have to drive long distances. Most of the emissions are coming from middle-income countries, and what they're doing to build roads and shelter is providing sort of the basic level that I think we'd all agree everyone should have access to. And so, we can't get rid of that. We can have some efficiency. A good example of that is the current windows were never designed to avoid the heat leaking out. And so if you're willing to pay for this improved window, it's called Lux Wall, and there's others, then your heating bill goes down.
What about food and agriculture?
Well, food is fascinating because food is a source of emissions, particularly cows and rice and fertilizer. But also, the biggest negative effect of climate is that poor farmers who live near the equator, their crops are going to fail far more often, and that leads to malnutrition, which leads to vulnerability and way more deaths. And so we've got to innovate in agriculture, both to get rid of emissions, but also just so these farmers can have food and continue to have their life expectancy go up.
Bill Gates there speaking with Bloomberg's Francine Lacqua on the sidelines of the COP28 summit in Dubai. Now, coming up on the program, French President Macron throws a spanner in the works in the long-awaited EU-Mercosur trade deal with South America. 2 large trading blocs. We're going to bring you the story next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. Happy Monday. We are 45 minutes into the European trading day. You're actually seeing European stocks turn into positive territory, up 0.1%. US futures remain in negative territory, down 0.2%. And across your sectors, retail and real estate at the top of the list. Basic resources and energy a drag here in Europe. Let's get to what's happening in France, though. French President Emmanuel Macron has weighed in on a major trade deal between the EU and South American economies, saying the environmental concessions so far fall short of what is needed. This as Brazilian President Inácio Lula da Silva arrives in Berlin for further talks. For more then on what is going on, let's bring in Maria Tadeo, Bloomberg's Europe correspondent. Maria, this sounds like this would be a huge free trade agreement then between the two blocs, and yet the prospects, are they dimming as a result of this intervention from Macron?
Well, they are dimming, at least for this year. And the French president not only said on the environmental standards it falls short on the Latin American side, he also said it would have, quote, a disgusting footprint, carbon footprint, that is. So, of course, on that basis, you'd assume, and I think at this point it's very fair to do so, that this trade deal between the European Union and Mercosur, which includes, of course, Brazil and Argentina, will not be signed, will not be inked before the end of the year. Remember, that was the expectation from the Brazilian president, Lula, who is in Berlin today. They hold the presidency of the Mercosur until the end of the year, and they were hoping it could be finalized in 2023. Now, if you add the comments from the French president, but also some of the timings, the key players involved here, like Argentina, which is changing governments at the end of the week, it will make it very difficult for this deal to go through this year. Does it mean it's fully dead? We're being told no. But of course, if you're hoping for a quick resolution or a quick breakthrough, that at this point, like I said, it is safe to assume will not come through now until the end of the year in 2023.
So, Maria, what is it going to take to actually salvage this deal?
Look, it's a difficult one because already when you look at the European side, some countries that really want Mercosur, they say there has been already a lot of progress, that the deal is within reach. But when you listen to the French president, and not just, by the way, it's obvious that they see a gap. Some of the language from Emmanuel Macron was extraordinary. He says we're looking at a disgusting carbon footprint if we assume that there would be imports coming from Latin America that will not meet the standards that we tell our farmers they have to to operate with. The other issue here has to do with Argentina. There has been a change in leadership. There is a government that is on its way out and a new one on its way in. The question is, what kind of relationship will they have with Brazil, and how will they look at Mercosur overall? Now, the other point that I should stress, however, is that when you talk to European officials, they do say that this is a deal that the head of the Commission, von der Leyen, is determined to get across the finish line, and they also insist and highlight that it's not just a trade deal, it also has meaningful geopolitical value when it comes to some of the dynamics that we're seeing play out of massive competition, including China.
Okay, really interesting. Maria Tadeo, Bloomberg's Maria Tadeo, of course, on the latest and the challenges around this EU-Mercosur trade deal and the prospects of that. Coming up, Spotify cuts jobs by 17% in at least the third round of cuts this year. We get more on that story. The details next. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Post.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today. We are about 51 minutes into the European trading day, starting to see sentiment turn just a little bit of green on the screen, even though, of course, we opened substantially in the red across those European markets. I want to get to our top corporate story here. Spotify saying it will reduce headcount by about 17% to improve profitability. This is at least the third time this year the streaming service has cut jobs. Let's get more with Aggie Cantrell, our tech reporter over in Berlin. Aggie, walk us through the reasoning for such a significant reduction.
Yes, Kiriti. So yeah, this is much more a significant reduction than what we saw earlier this year, when basically we saw a 6% cut in January and then a 2% cut in June. But the 17% was not the only option that they had. In the letter to their employees, Daniel X said that there would have been an option to extend these reductions, smaller reductions, over the course of 2024 and 2025, but instead they opted for a huge cut right now, 17%. That's essentially 1,500 workers around about. And so it's a really significant and impactful cut for the company, but it's really coming from this place of the company wanting to be so critical on costs and make sure that they can continue turning a profit.
Agi, I wonder to what extent this comes as a surprise then to employees at Spotify. The stock is up more than 100% year to date. They've turned a profit, as you said, and they've already cut headcount.
Yeah, exactly. So there is probably a lot of surprise just at the depths of these cuts, because the company has been able to stay on course and has been able to recently turn a profit. And that was announced in October in their last earnings call. And they seem pretty bullish about the company's ability to be critical on costs. But really, this is a question of a longer-term strategy for the company. And this is a company that has sunk billions into trying to diversify its business by also pivoting towards podcasts, as well as their typical music offerings. And on top of that, they also need to commit huge amounts of financing all the time to the licensing of that music, to the music license holders. And so that's a critical part of the business that they need. So they will always have high cost outgoing. And so what they're trying to do is internally make sure that they can reduce costs in terms of how many people they have on staff.
It's really interesting that you mentioned the long-term strategy here as well, because it was really striking that we're talking a lot about, of course, the payrolls data coming out in the United States. We have a lot of the job questions when it comes to the macro sphere. The higher cost of capital was really interesting phrasing in terms of Spotify's strategy. How long do you think that lasts in context of the kind of long-term planning that you were just talking about?
Yes, exactly. So the real concern when it comes to the higher cost of capital, that is a fear for the company that said already in this announcement today that they had expanded their staff significantly in 2020 and 2021 when capital was much cheaper. Now they're looking at basically being able to double down on their core products. And as they put it in that announcement this morning, focus on their key stakeholders. And Daniel Ek said that he thought that there were too many people doing essentially support work for other teams, and what he needed is that the people were so focused on what he refers to as being relentlessly resourceful, essentially doing the same work that Spotify does, but on a leaner staff.
Okay, Agi Cantrill on what is happening with Spotify and the job cuts coming through there. Thank you very much indeed. Let's check back on these markets then. European stocks eking out gains of about 1/10% so far in the session. The real estate retail sector is gaining the most, up a little over 1%. Basic resources, though, taking a hit, down 1.6%. Iron ore under pressure. But for me, really, the interest, Kriti, coming through in what's happening with treasuries, given the run of money into US debt last week, and the oil markets as well.
Well, I think you mentioned treasuries, and my immediate thought is, how does that translate into FX? If you start to see this massive move in, of course, interest rates, do you then start to see the ripple effects in the FX story? And that's where this chart really comes in handy here. Ernest Sang over in Asia built it, basically saying that, look, more and more asset managers are saying the dollar is going to continue to weaken. They're actively positioned this way. It might explain, even though we're talking about all these crises in Europe, we're still seeing a euro and cable rate at pretty strong levels.
And you link that then, dollar pricing, of course, into the oil story, because that's something else I want to hit, given the fact that we got those OPEC plus cuts, as expected, coming through, but we know that there was a wrangling, and of course the meeting was delayed, and it seems to be a lack of conviction that OPEC plus and the cartel can really put a floor under prices, along with increased production from non-OPEC members. And you're seeing prices on oil down again, $77 a barrel. Brent down 1.3%. It's a similar picture for WTI at $73 a barrel. This is good news for the inflation story, but it's another warning sign about arguably the strength of the global economy.
Yeah, Tom, you say oil. I think climate change. We're going to have plenty of more coverage there from our UN climate conference in Dubai as well. In the next hour, we'll be speaking with BlackRock Vice Chairman Philip Hildebrand, White House National Climate Advisor Ali Zaidi, and Adani Green Energy's Amit Singh, all up on Bloomberg Television just shortly. That does it for Market Today. You can, of course, get insights from us and the team on the front page of the Bloomberg UK website, or simply by typing TLIV-GO on your Bloomberg terminal. The Pulse is up next. Stick with us. This is Bloomberg.
used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Dubai with some special coverage this hour from the 28th UN Climate Change Conference. It's 28th. That's why we call it COP28. Now, we have a host of top interviews this hour, including the White House National Climate Advisor, Ali Zaidi, an exclusive interview with Adani Green's Chief Executive, Amit Singh, and we'll also be joined by the BlackRock Vice Chair, Philip Hildebrand. Now, first thing is first, activists and observers at COP28 here in Dubai have all condemned some pretty controversial comments from the summit's presidents. Now, Sultan Al Jaber is reported to have said that the science does not support calls for the total phasing out of fossil fuels to keep the global temperature rising to 1.5 degrees. Now, COP28 officials say the story is an attempt to undermine Al Jaber, who also heads up the UAE-owned Abu Dhabi National Oil Company. Meanwhile, the Microsoft founder and billionaire clean energy investor Bill Gates tells us he sees the world's chances of keeping temperature rising below 2 Celsius centigrades fading fast. Now this, as bankers and the investment industry explore new funding structures and partnerships on COP28's Finance Day. So to get us started, our senior reporter for climate, Akshat Rati, now joins us. Akshat, thank you for joining us. Now, you are a COP veteran. You follow this closely. You have a green newsletter. You have a great podcast. How are we doing?
So the first few days have gone smoothly. We've had big announcements, some of them with real money attached to them. So the Loss and Damage Fund, which is supposed to get developed countries to pay for damages in developing countries, has been agreed upon. There is $500 million in there. Not a lot.
It feels small.
It is, but to get it going, that is what you needed at least. And so we've got over that hurdle. There have been a number of announcements on health. There'll be some, I assume, on finance today that are hundreds of millions of dollars. There's some private announcements coming from the UAE trying to invest in billions of dollars, so a $30 billion fund to invest in clean energy around the world. But we are yet to see how detailed those proposals are. So a lot gets announced, but the real rubber hits the road only after COP.
Okay, I like that. The real rubber only hits the road after COP. What about methane? Are we getting pledges? I mean, this should be a low-hanging fruit, right?
So methane is actually a really good example because the first announcement around it was made in COP26 2 years ago. And since then, we've had a series of government interventions and pressure to try and get more governments to agree and get oil companies to join the fight. And so this time around, the number of countries who've signed up to the pledge has grown, and oil companies have come and actually given money to try and increase the work they do to reduce methane emissions. That is the quickest, cheapest, fastest solution that we can deploy right now to try and slow down the warming that we are seeing.
Oh, actually, at the same time, so we had the vice president of the U.S., we don't have the president, we had the Chinese climate envoy, we don't have the Chinese president. I mean, we really need those two at the table if something concrete is going to happen.
We do. The good thing is that before coming into COP28, the leaders did meet in San Francisco at the summit, and they did put out a communique on climate very specifically. So they agreed to collaborate, and that's going to mean a lot for the negotiators, because even though the leaders didn't show up, it's really the negotiators who do the job. They're empowered by the leaders, and the leaders seem to have given a mandate.
I mean, there's a lot of controversy surrounding the COP president. He is the chief executive of ADNOC. But at the same time, there's a lot of preparation, which is why we have this loss and damage. So how do you think he's doing?
So far, yes, you're right. In terms of his deliverables in the first 5 days, it seems like he has, right? Loss and damage, getting it out the door, really important. But it is what happens at the very end. And that requires him to bring 200 countries together. So the criticisms that he's got, these stories that have come out, are going to try and maybe undermine the trust that is required among these countries. And we are going to be reporting over the next 2 weeks to figure out if the diplomats who will make the call are listening to these stories and are less trusting of him or not.
So we also asked Bill Gates about this, and he was very measured. But just to be clear, like, how do you see the phasing out of fossil fuel going? Like, how quickly is that needed? We had the IEA report last year, yes. But how quickly does that need to be to hit the targets?
Well, it has to be quick. So phasing down, the reduction in the use of fossil fuel has to be quick. Do we need to get to zero fossil fuels? If we can, that will make solving climate change easier. But if we don't, which may be the case because there are certain places like flying where we do need fossil fuels, or we need them in developing countries where we don't have renewable energy. So maybe some use of fossil fuels is necessary from a development point of view, but then we need carbon capture technology. So scenarios to get to a stable temperature are hundreds. Most of them require a rapid phase down of fossil fuels this decade and very close to zero by mid-century.
I mean, I love having Akshat on, because yesterday I spoke to an investor, and I've been dying actually to ask you what you thought about, energy consumption being lost. And so this is the idea, and so I'm doing it live on TV, like the beauty of Bloomberg TV. So he basically says he's trying to change, LED light bulbs. He's trying to argue that one of the most important things is that when energy goes from A to B, so from the producer to the consumer, it doesn't get lost. Fertilizers, for example, a lot of gas wastage with the current agriculture. Like, how important is that we don't waste the energy instead of, as much as we phase it out?
It's the most important, least sexy solution, and that's why we don't talk about it. So we've talked about tripling renewable energy. That's another goal that may be set by the 200 countries. Within that, there's also a goal to double energy efficiency. That's the idea. You use the same amount of energy, but you do more work because you waste less. And we kind of don't talk about wasting less, but it's a really, really important solution. One very good place to see it is India. So India moved from the incandescent bulb, the 100-watt bulbs that we had, which were hot, to LEDs within a decade because government incentives, but also they're cheaper to buy and cheaper to run because you're consuming 5 watts, 95% reduction.
It's incredible. You see, what do you say? That least
energy
sexy, but I know
least sexy,
but more important.
But the most important.
There you go. That's what we do on the Pulse. Bloomberg's, of course, senior reporter for climate, Akshat Ratti. Now, we also spoke to Bill Gates. He says that the world probably won't meet the Paris Agreement's goal of keeping the rise in global temperatures below 2 degrees Celsius. However, he did praise the COP28 summit for making progress on tackling climate change despite some of these geopolitical tensions across the globe. Now, I spoke to him on the sidelines of the summit here in Dubai.
Well, we have to outcompete fossil fuels. Now, to do that properly, they shouldn't get subsidies, and in fact, a carbon tax over time should be put on so that the new, say the electric car or the plane that use hydrogen, the fact it doesn't emit carbon, you're helping it get adoption. Those companies have skills, if you want to sequester carbon or, nuclear waste, or there's a lot of skills if you want to make biofuels. Some of those companies will take the capital and skills they have. So I wouldn't, say, okay, I wish they weren't there. People still, there's no country
that can say, okay, we have zero emissions. People want to drive to work. In fact, the excess supply, when Russia cut off its supply, the world was sort of glad that was available. And so, yes, oil and gas needs to be outcompeted, and those companies need to join the effort.
I know you look at a lot of technologies and a lot of innovation, but is there one thing that you've been most excited about in the past 5 years, or that you're most excited about for the future? I know we talk about nuclear fuel. We talk a lot about the really big, exciting stuff. What are you excited about?
Well, I love all my children, and I have these 100 companies, and I never knew that we'd get a new way to make steel or cement or beef. It's fair to say that if we can get either nuclear fission or fusion to be safe and broadly accepted and very economic, because it's not weather dependent, it would be very complementary to the large amount of solar and wind that we're putting into our electric system. And so I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time. We can't count on it. Fission, it has been too expensive, and fusion doesn't exist yet.
But fusion, 15 years from now, what's your? I know it's a guess at the moment. But
well, of the 4 companies I'm invested in, one of them, Commonwealth Fusion, has a credible path. Things will have to go well. That in the late 2030s, they'd be making electricity and start to scale it up. So that's an aspiration, but it's a great company, and we have 3 others that aren't quite that early, but are within 5 to 10 years of that.
We're in a strange place in the planet right now, because there's a lot of unknowns. It's AI, it's technology, it's of course climate change. Do you find leaders distracted, or are they still putting climate change as some of their top priorities?
Well, we can't have as our only priority. We still need to buy vaccines and bed nets, and when there's a war, that properly demands attention, and even the aid budget, for those refugees and everything. It is, I wish there hadn't been a pandemic or Ukraine war or Middle East unrest. Those are going to take away from the amount of tension we have on continuing to make health progress and climate change. So, those are bad developments. If you'd only seen 10,000 people come, versus 35,000 last time, you might have said, wow, we are really getting distracted. Instead, twice as many came here, including a lot of the big businesses. So the signs I'm seeing are that while we still have to deal with those things, and we have limited resources, so we have to spend them well, that climate progress is moving ahead, even though we won't meet our highest aspiration.
Bill Gates, one final question on AI. How does that fit into your vision for?
Well, AI is such a powerful technology, and this recent advance where the AI can basically read and write, that's going to affect every human activity. And so we're using AI to find new drugs. We're using AI to look at climate change. And so all of our companies are going to move faster because AI helps them explore different solutions and move a lot better. So, certainly for challenges like this, AI is very much our friend.
Bill Gates there, the co-chair of the Bill and Melinda Gates Foundation. Now, coming up, what can financiers achieve at COP28 on Finance Day? We sit down with BlackRock's Vice Chair, Philip Hildebrand, to discuss the biggest challenges in unlocking investment in green projects. Stay with us. This is Bloomberg.
much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacroix here in Dubai from COP28. Now, here are some of the other top stories this morning. The Israeli military has stepped up its offensive against Hamas in southern Gaza. Now, UN monitors say the expanded offensive has forced hundreds of thousands of displaced Palestinians to crowd into southern parts of the Strip. The Hamas-run health authorities in Gaza say at least 15,000 people have been killed since fighting began in October. At the same time, a U.S. Navy ship has responded to a flurry of drone and missile attacks against commercial ships operating in the Red Sea, underscoring the potential for the conflict to widen. And India's ruling BJP party won 3 crucial state elections and unseated the opposition in 2 of them, strengthening Prime Minister Modi's bid for a 3rd term in office. The BJP retained power in Madhya Pradesh and took control of the state legislatures from its rival, the Indian National Congress, in 2 other states. Now, the opposition's loss is a boost for the ruling party ahead of the general election next year. Hawaiian Holdings shares have soared at 200% after rival Alaska Air agreed to buy it in a takeover worth about $1.9 billion. Now, Alaska is to pay $18 per share in a deal that includes about $900 million of Hawaiian's debt. The move challenges the Biden administration's aggressive stance on mergers that has already derailed the partnership. Coming up, the U.S. pledges $3 billion for climate aid to developing countries. We'll be joined by the National Climate Advisor to the White House, Ali Zaidi. He's coming up next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Now, the U.S. has pledged to contribute $3 billion towards a UN fund to help developing countries with climate change. The Biden administration's commitment follows a steady increase in grants and loans to climate change in recent years. Well, I'm very pleased to be joined by Ali Zaidi, the National Climate Advisor to the White House. Thank you for making the time for, first of all, coming to the Green Summit, but also coming on TV with me. There has been good things about COP28. We're only in day 4. We still have another, 12 days to get through. What are you most optimistic about, and what are you disappointed by?
Look, I think, number one, we're really getting our act together on super pollutants like methane, like hydrofluorocarbons. The United States made a big announcement cracking down on methane pollution, good for our environment, good for public health and for workers. We're also seeing progress on renewable deployment. The U.S., when the Vice President was here, joined in a commitment to triple renewable capacity by 2030. That's a really big deal. But I think there's a lot of conversation that needs to be had about how we lift up our communities in the process. I think the issues of transition and of justice are important ones to have part and parcel with GHG. And then I think we've also got to have a conversation about how, over time, we reduce our dependence on fossil fuels, put those emissions in our rearview mirror.
So should a phasing out of fossil fuel be in the final communique? I know there's a lot of controversy also because we're here in the UAE, and I know we have to be tempered, but what would you like to see at the end of the day? You know, we've had a lot of discussion about this in multilateral fora before. The G7, we talked about abatement and emissions reductions from fossil fuels. We've got to build on that. The only way to go is forward to make progress, build on the G7 statement. But, I mean, the U.S. also has LNG. I think it's increasing capacity. Again, how do you marry the two? Is it a transition phase that then will come down, or what should investors be looking for in the transition?
Yeah, look, the fact that we have expanding load growth in the United States is a positive sign of the massive amount of manufacturing that Joe Biden's been able to bring back home all across the U.S. That's not a problem. Our opportunity is to meet that demand with growing clean energy, and it's an opportunity that's not just going to be met by renewables and storage, but also nuclear, hydropower, geothermal, where we've seen announcements just this week. So I think the answer is not slowing down or giving ourselves a longer bridge. It's just building those technologies more quickly.
And I know a lot of investors say, look at the U.S., they've done the Inflation Reduction Act, that will really help in bringing some of these technologies costs down. Overall, a lot of investors want a carbon market. Like, when will we get some kind of comprehensive template of how to deal with this?
I think we've got a comprehensive template in the Inflation Reduction Act, in the bipartisan infrastructure law. And as the president said when he went to the last G20, this is a playbook he wants replicated around the world. We're seeing a race to the top on this sort of industrial strategy figuring out a comprehensive approach to tackle the climate crisis. It's working in the United States. We want others to come in behind that.
We spoke to Bill Gates yesterday. He says he's optimistic because he's getting quite a lot of money in the funds that are needed to push with renewable energy, but he's not optimistic that we'll reach the targets set by the Paris Agreement. What's frustrating for you? Is there something that we should be going faster to get it done?
We've got to go faster on everything. For the countries that continue to say that they should be able to build unabated coal plants in 2023, we got to get them out of that game. For folks who look at parts of the economy like the industrial sector and say that's too hard to abate, we don't need to go there, they've got to come to the table. I think there are a number of places where folks can step up. That's why the United States shows up to dialogues like this. That's why Vice President Harris was here, because we've got to push everybody to look at every sector of the economy and scale up and push through some of the barriers that we're seeing around siting and permitting, supply chain. We've got to be able to deal with those. We're dealing with them in the States, and we've got to work with allies and partners to make that easier around the world.
But to convince countries not to build more, coal-fired plants or shut them down, is it just money, the transfer of money? Will that get the job done?
De-risking the technologies is a big part of it. The Inflation Reduction Act will knock down the price of a lot of these clean technologies by about a quarter. That's why we're confident that for every ton of emissions we reduce in the United States because of the president's policies, we'll reduce a ton or two everywhere else in the world as well. So it's about knocking down the price of the technology, reducing the cost of capital, increasing folks' ability to move quickly because of policy environments that enable it.
Ali Zaidi, thank you so much for joining us. He's, of course, the National Climate Advisor to the White House. We'll have plenty more from the Green Summit here at COP28. Coming up, the Adani Green Energy Chief Executive also joins us here at COP28 Climate Summit. We'll have him for an exclusive conversation. And then because it is Finance Day, I've heard, of course, of a lot of solutions also for maybe some of the carbon credits. Some of them say, look, it's just cheating. Others are trying to put them in parcels that may be cheating for a while, but gets us at the end of the day to the climate transition or to the transition quicker. So I'll also have a conversation with the Vice Chair of BlackRock. He's Philip Hildebrand. That's coming up shortly. And this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Aqua here in Dubai from COP28. Now, there have been a couple of wins, some of them saying, look, if you look at the methane pledge, that's certainly something that was expected, but still it will make quite a big difference going forward in terms of some of the leaks, and therefore will get us closer to some of the Paris Agreement pledges. Now, let's also go straight to Youssef Kamaldeen, who's in the blue zone. It's about an hour from where I am. I'm at the Green Summit of Bloomberg, but he's in the blue zone with an important guest. Youssef.
Thanks, Francine. Stocks of companies owned by Gautam Adani are rallying, and they're rallying hard, adding to gains last week, which saw more than $5.5 billion added to the billionaire's net worth. It comes after India's top court concluded hearings in a lawsuit where the market's regulator is probing wide-ranging allegations of corporate malfeasance against the conglomerate. Joining us now is Amit Singh. He's the CEO of Adani Green Energy. Amit, I want to start off with COP28. You just arrived a few hours ago. What kind of meetings have you lined up, and what do you hope to get out of this conference?
Yeah, sure. I think India's decarbonization journey is really getting started. If you look at where we are today and our goals for 2030 of 500 gigawatt, Adani Green is playing a big role. And, you know, we have 8.4 gigawatt of install base, and we plan to get to 45 gigawatt. You know, we can't get there if we are maintaining our pace. So we really need to up the ante and increase our pace of installation and operational capacity every year. So we're planning to grow to 5 gigawatt per year next year. And, you know, here in COP, I'm really looking to engage with key stakeholders, look to understand what the world is doing, but also make a very strong case of how the rest of the world can learn from India's journey in renewable, where we really, you know, move very quickly, very fast as well. So.
I mean, for India, the challenge is more about supply chains rather than it is about the language necessarily or about the goals. Would you agree with that?
Yeah, I think so. I mean, if you look at this kind of a scale and speed, it's very important to localize the supply chain. And this is really what we have tried to do. We've really localized, if you look at solar, we have looked at localizing our tracker, making sure that there is a lot of indigenous component. We continue to build onto that and also look at localizing all other equipment which goes into it. We have a sister company which has just commissioned 5.2 megawatt wind turbine, which is going to be the biggest in India, which we are going to use. And really, I think if we want to bring speed at this, localization is very important. At the same time, it also helps with local job creation. When we execute these mega projects, we need to take the people along. We need to make sure that the people who work with are contributing and benefiting from it. So yeah, it is really the name of the game.
Adani Group stocks are soaring. I was talking about this at the beginning of the show, but just today, the group has added $9.8 billion in market capitalization. The theory, according to some of the people we've spoken to, is that this is related to the BJP state election gains. It clearly has initiated some buying interest in Adani. Maybe you get more visibility on some of the infrastructure-related projects. Do you agree with that? Could there be more coming your way beyond just the political stability, new projects for 2024?
Yeah, I think, you know, in India, the bidding is very open book tenders, and I think a lot of those tenders are essentially, you know, available every year. I think the stock market really looks at stability of policy and stability of governance. I think So I won't comment on what happened this morning, but I think a stable policy, a positive and progressive policy combined with really economic progress we are making is what I think our stockholders and investors are recognizing, and we hope to continue to drive in that direction.
I mean, in terms of deploying CapEx into the new year, right? So you're talking about political stability, so you can ride those coattails. You've got a government that is keen to do what it can in terms of the transition. What's going to get deployed for capital expenditures into renewables in the new year?
Yeah, so if you look at our stated goals, we are projecting approximately $1.5 billion of capex for this year, which will essentially mean that we will install 3 gigawatt new capacity by end of financial year this year. Next year, we're looking to grow that to 5 gigawatt plus, which translates into $3+ billion of investment. If you look at our stated goals of 45 gigawatt, we are talking about a capital outlay of $22 billion, and we are very well funded. We have a very strong support from our stakeholders and shareholders, and that's the projected plan which we are going to execute and achieve essentially our goals, but also India's decarbonization goals.
When I look at the example of Saudi Arabia, the UAE, and sort of many other countries that have led the way with collaborations in terms of bringing know-how in, right? So that is where the link is with Total Energies' involvement and equity participation. Could you get us up to speed with that?
Sure. Total has been actually a great partner in this company. They hold today a 19.7% equity in my company. And this has really grown from strength to strength. They also own on a project level 2.1 gigawatt, 50-50 joint venture. And they are also renewing interest in investing additional $300 million plus in another joint venture, which we are embarking on. So really that partnership brings multiple benefits. They are also our board member, which helps with getting good governance practices shared between the two companies. And also we share back and forth a lot of good practices, business practices, and renewable industry is a bit new. A lot of experiences in India they are benefiting from globally, and it's a very, very a good synergy between the two companies today, which we are building strength to strength as well.
I mean, if there's a front for potential expansion beyond India, where would that be? Or are you going to focus on your home market?
I think India is such a big market. India is growing very fast. If you look at the electricity demand in India is growing at 7% CAGR year on year, when the rest of the world is around 2%. So it's both national interest and economic interest to stay focused and concentrated in solving this big challenge and opportunity ahead of us. But we will look at other places where we can add value, and we will maybe share those plans as time goes by. But right now, I think we are very focused on making our bets in India successful.
Amit, thank you for clarifying some of these issues, as it were. That's Amit Singh coming on a very important day for Adani Group stocks. It's been on a tear. Amit Singh, CEO of Adani Green Energy. Still much more to come. Francine is going to be joined by BlackRock's Vice Chair, Philip Hildebrand. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
The top names in global leadership are on Bloomberg.
What we've just delivered are significant tax cuts. For business, we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. That's an incredibly generous regime to attract business investment.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
Welcome back, everybody. So today, Climate Finance Day here at COP28. Senior figures in the world of finance have really been calling for better data around emissions and, of course, the viability of green projects in order to unlock more investment. Well, I'm very pleased to be joined by Philip Hildebrand, who's the Vice Chair of BlackRock. Philip, thank you for joining us. I mean, we always talk, of course...
Good afternoon, I guess.
Good morning for our London users, because they're the ones that tune in the most. When you look at some of the climate initiatives here, I know there's a lot of questions about, the phasing out of fossil fuel. There's a lot of questions on the carbon markets, on carbon credits. But then we have the loss and damage fund. So are you optimistic that, we're day 4 and we've already achieved something?
Yeah, I think we've achieved something. I mean, this is like a huge Greek play with lots of different actors. So it's hard to tell, where it concludes or when it concludes. We're about halfway through. I think there are some positive elements. To me, the most important one, perhaps, is we're beginning to see actual private capital formation designed to go into the emerging world in order to invest in the climate transition. I think that's, to me, when you look at the overall challenge, if we can't solve for that, then we won't make it. So this is the key piece of it, and now we've moved from just talking about it, recognizing it as a problem, to early stages, early signs of capital formation out of the private sector to be mobilized for the transition.
But then we need to put it somewhere. So the capital formation, like how hard is it to find the right projects at speed?
Exactly. So I think that, first was recognizing it as the main problem. Now, various announcements from the hosts, from Singapore, from many other places, we were involved in it. You're beginning to see private capital being kind of created, formation of private capital. Now comes the big questions. Where are the products? How do we make sure it goes into the right projects, into the weakest regions, in a sense, in this? And that's going to be, to me, that is the key message coming out of here. If we can't solve for this, we're not going to tackle this existential problem of climate change.
But Phil, how much of a chance is there that we do have some kind of comprehensive carbon markets, right? Even language that holds together in the next couple of weeks?
I think that's difficult. To me, I was thinking in the car over here, what's kind of one of my future takeaways, and the carbon market is something we have to kind of wrestle with. I think the community as a whole, that's in a sense the next stage. That has to be part of it as well. So we have all these elements. We have reduction of emissions, new technology, carbon markets, air capture. Many people don't like this, but that is going to be clearly part of it. The involvement of industry. This was the first time that really you had heavy industry, including oil and gas, that was part of this COP. Those are positive signs. But I think at the moment, I want to kind of emphasize just the importance of getting capital to the emerging world. And here I'm beginning to see some progress. We need the projects, as you said. And that's, by the way, where the MDB reforms, MDB discussions are going to be very important. The World Bank needs to think of itself not as a competing agent to the private sector, but as an enabling agent. Same with the other MDBs. And there's some progress there, particularly at the regional level, that gives me some hope.
And it feels certainly like the new president of the World Bank has really put this at the forefront of what he wants to achieve, right? Identifying some of these projects. The problem is that Indonesia is very different from Vietnam. It has also local regulations. So do you think that we'll be able to manage the transition or at least the readaptation in time?
I hope so. I mean, what I'm a little worried about is that, that there's a lot of focus on the really big problem, changing the capital structure of the World Bank. From my experience in the public sector, that's going to be really hard. So I would encourage him, and he's done a great job, in the first few months, encourage him to look at the things that you can really change, the mindset of the institution, getting out of the, not competing with the private sector, but enabling, empowering the private sector, making the projects, they are closer, the MDBs are closer to the projects in many cases than the private sector. Make those projects available now that we're beginning to see some formation of private capital. So, you know, I would think it's important to think of the reform of the World Bank, not just at the level of the capital structure and the stakeholders, but also at how do you change the internal kind of workings of the World Bank in that regard.
Phil, how complex is this in a world that's ever-changing, where we're seeing huge rallies and then bets on a Fed rate cut, which could be imminent? I mean, the world is volatile, the world is evolving, so where does climate change financing come into this?
This is very hard. Things are hard. You look at these kind of newspaper articles that talk about, you know, how little progress we made, but we've had a pandemic. We have a war in the middle of Europe. We have another war, you know, in this region. So this is really hard to do all this, to ensure that it's fair and just, that we have growth. Industry has to be part of this. I don't see how you do it any other way. So this discussion, by definition, is difficult, it's hard, and we have to just chip away at it day by day and make progress where we can. Again, to me, the core is we have got to mobilize private capital for the emerging world to fund this transition. If you look at the need, I mean, we need about a 15 to 24 times increase, let's say a 20-fold increase in the investment flows into the emerging world. That's not going to be funded by the public sector. The private sector has to step in. Private capital has to be mobilized. And I think, to me, that's, you know, at least the first few days, there's a hopeful message coming out of this.
I mean, I guess maybe it was difficult as interest rates kept on going up. Do you think we've reached peak rates?
Well, I think we're probably close to it. What we're going to struggle with now is we have a lot of production constraints globally. The geopolitics are fragmented. Demographics are putting constraints on it, which means in my mind that it's going to be harder for central banks. They're going to face more difficult trade-offs between output and inflation. So we'll probably have more volatility in markets. We'll have less trending markets. Beta will be less of a force. So the macro environment, I would say, is going to be, in a sense, more challenging than what we've seen during the Great Moderation. And in all of that, you know, lower trend growth, higher volatility, higher interest rates, that's going to make this climate fight more difficult. There's no question about it in my mind.
But lower trend growth, not a recession.
Yeah, I don't think that's so important in a sense. You know, it looks like we can avoid a recession, but I think now that we've mostly normalized the post-pandemic distortions, inflation has come way down, is still coming down, interest rates hopefully have peaked. But, you know, the next challenge is now, how do we operate in a world that is constrained on the production side globally, which leads to, I think, bigger trade-offs for central banks, more difficult trade-offs, probably lower trend growth and higher interest rates, and at the margin, stickier inflation. That's going to make the policy challenge more difficult.
Do you think the Fed will, I mean, the market is definitely pricing in Fed cuts maybe earlier than the Fed governors are, you know, they're kind of pushing back against the markets quite a lot. Like, how they've been pushing back for the last 6 months. Every 6 months there's like a fear in the market. They get kind of talked off a ledge. It's fine. And then after 6 months there's always this fear.
Yeah, this is a lot of this in my mind. I would be skeptical on the sort of rapid, you know, rate cut story. Mostly because I think a lot of people in the market are still thinking in terms of the old world. So we're going to, you know, get into weak growth, therefore central banks can cut. My message would be, you know, we need to be prepared for a different type of overall macro environment. Global production constraints, more difficult trade-offs for central banks, less ability to respond to weakness by immediately cutting interest rates, higher rates on average, lower growth. So we need to think of not a return to the old business cycle model, but kind of a new world that is shaped by these production constraints. Now, if we can resolve them, if we can resolve the wars, if we can, you know, make progress on the transition, that will help to expand the production capacity of the global economy. That's the key objective in a way, if you look at it in a broad policy sense.
But Phil, so what does that look like? And also I was looking at, you know, figures of onshoring and investment in the U.S. I mean, they've gone through the roof. I mean, you literally have a chart that was flat and then it's just taken off.
Think of it as a rewiring of the global economy that, you know, on balance leads to higher costs, which leads to more production constraints, which leads to, you know, higher inflation on average, lower growth. And so this is a more, I would say, a more challenging world. It doesn't mean there are no opportunities. Investors are going to find great opportunities in this, but we're going to see less trending markets, more volatility, and for the policy world, more difficult trade-offs, which is why it's not as simple as to say, oh, growth is weakening, therefore central banks will be able to cut rates rapidly. I think that's too much anchored in the previous world. We're now in a new regime, which is a different one. And so I think, that's what we need to kind of wrestle with, this new environment.
Yeah, you have these competing forces. Philip, as always, thanks so much for joining us. That was Philip Hildebrand, there, the vice chairman of BlackRock. Now, we'll have plenty more to come here from COP here in Dubai. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Connection lost.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, the most important challenge that we have for our security is to control the fundamental supply chains, and energy is one of those, and that is why Italy is working hard on that.
Well, that was the Italian Prime Minister Giorgia Meloni speaking on the sidelines of COP on taking control of energy supply chains. She wants to put Europe really at the forefront of some of this. Now, today is Finance, Trade, Equality and Accountability Day at COP28, with bankers and investors really calling for better data to boost green investment. Now, joining us to understand the latest events is Bloomberg's head of green, ESG and equality. He's our very own John Frauer. John, thank you so much, and congratulations really to the team here on the ground that have been reporting nonstop to try and get us scoops. First of all, how does energy and the energy complex figure in this? And we're talking about transitioning, we're talking about becoming more energy efficient, and we're talking about phasing out fossil fuel. Like, what's most important?
Well, I think one of the most interesting things about this COP, that this is the first COP where we've seen the oil and gas industry come to COP. This was something that President Dr. Sultan Al Jaber was very keen to do. We saw the oil and gas majors signing up to an agreement to cut their methane emissions on one of the first days of COP. Big, big, big dramatic announcement. However, also extremely controversial. A lot of climate activists say they're only cutting their methane emissions. They're not actually talking about phasing down fossil fuels. And interesting, I think it was the CEO of Exxon said, COP has spent too long talking about renewables, so not enough talking about oil and gas. Again, those are comments guaranteed to wind up the climate activists who've been coming here for years. So quite controversial.
What about Finance Day? So again, GFANZ, some of the real pledges on finance was only 2 years ago in Glasgow. Right. So I don't know whether we're expecting too much or whether you're frustrated because it's too slow.
Well, I think everyone would agree this is happening much too slowly. I think what we're seeing here at this COP, and today especially, today is Finance Day, we are seeing the largest number of bankers ever come to COP today. And the challenge here is how do you turn billions of dollars into trillions of dollars? So billions of dollars have been pledged, but to get the energy transition going around the world, we need tens of trillions of dollars invested over the next 10, 20 years. So what the bankers are talking about is how can we create mechanisms, carbon offsets, for example, carbon markets, to actually accelerate this flow to the countries that need it the most, because governments don't have the money to make this energy transition happen in a just and equitable way. The only other place where it can come from is the private sector.
So what's the biggest barrier? Once you have the money, how do you choose a project? This could be smaller projects, for example, for coal-fired plants in Indonesia. They could be for, water renewables in Vietnam. So it's very difficult also to have a template for a lot of these projects.
Yes, and there are lots of interesting projects happening around the world. The so-called Just Energy Transition Partnership. So Indonesia is one of the big ones happening right now. But you're right, it is fiendishly difficult. How do you get countries to stop using... You can't get countries to stop using coal overnight. This is a process that will take 10, 20, 30 years. So, we saw the loss and damage fund being set up. Still lots of questions about how that will work. So we're really just in the beginnings of all of this. But of course, we don't have that much time.
Loss and damage, at least we have a fund.
Yes.
There's not that much money in it, but are you confident that this will make a meaningful difference? And it feels like this was prepared ahead of COP, right? That there was an agreement and we didn't see the fighting like previous years.
That's right. That is one of the achievements of this COP. The Loss and Damage Fund has been operationalized, to use a horrible word. But again, with that, lots of questions about how will we disperse the money in that fund? All of these questions get they're both technical, but also very political about who gets this money. So a long way to go. We're always operationalized here on Bloomberg.
John Farrar, our head of Green ESG and Equality. Now we'll have plenty more, of course, from COP28 here in Dubai. But throughout the day, we have some great interviews and some great panels coming up. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Crenny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Stocks and treasuries fall after rallying against Chair Powell's pushback on markets' rate cut bets. Now the focus shifts to payrolls due later this week. The Israeli military is expanding operations across the Gaza Strip and warns residents to evacuate again. Meanwhile, a U.S. Navy ship responds to a flurry of drone and missile attacks in the Red Sea. And Super Deal Monday. Roche agrees to buy obesity drug maker Carmot. And Alaska Air takes on Hawaiian Airlines. Two deals scoring a $5 billion price tag this Monday morning as you wake up. Plus, it's day 5 of COP28 in Dubai. We speak to the Dutch Finance Minister and Deputy Prime Minister Sigrid Kaag. Very good morning to you. What you have is a moment of doubt. Little bit of doubt in your mind that you'd such a mad rally in November that you're going to get a little bit back. Moderation, pause. How do you want to describe the market? It's absorbing Jay Powell's jawboning. It's premature to pricing cuts. But the S&P delivered the slimmest gain in 5 weeks. Now, Wilson over at Morgan Stanley sees stock market volatility in December and the VIX having traded to the lowest level since 2023. Do you buy volatility? Do you squander your hard-earned money that way? Europe's a bit lighter on its feet, down by 0.5%. And what you are seeing here from Wilson is there's going to be better entry points in these markets. And essentially what we've got here is markets assuming up to 90 basis points of cuts, according to Jim Bianchi. We'll talk about that in a moment. Uber, keep an eye on Uber. It was up 7% in after hours. It's joining the big boys and girls. It's joining the S&P 500. As I say, a little bit of angst in Europe this morning. We've got a pre-Christmas wobble, just a few too many glasses of mulled wine over the weekend. It had its best month since January. Industrial production is on the slate this week for France and Spain. That comes out on Tuesday. To Zurich, up 0.5%. Why? Because Roche is out there spending $3 billion, up to $3.1 billion, getting their hands on a drug that could put them head-to-head with Novo Nordisk in the diabetes and weight loss product area. Go on the Swiss, bucking the trend. Good morning, Dan.
Good morning, Manus. I've got some bad news for you this morning because I know you were out over the weekend shopping for my gold bracelet present for Christmas. Well, you're now going to spend a record amount because we have it, folks. We have bullion topping an all-time record. It flirted with 2,100 this morning, but it hit that record on Friday. It's real rates turning around. It is a weaker dollar. It is Fed bets of a cut, and it is the geopolitical risk that's had us rush into gold. But, Manus, you've got it right. It is a pause this morning. Let's flip it up. Let me show you what gold is doing this morning because it's flipped back and forth between gains. Again, went up to 2,100. And now we're looking at a slightly softer yellow metal. It's now just under 2,100. Bitcoin, though, those gains hold on really well. We're almost at 5% gains. $41,601 is where we stand on Bitcoin. It's the same old story, Manus. It's the Fed rate cuts as it is expectations for an ETF. We don't have a spot ETF yet. But again, there's a lot of hope out there. We're going to get it. Finally, 10-year yields. Don't be fooled by the sell-off today. We're up about 5 basis points on your 10-year yield. It was a drop of 13 basis points on Friday, Manus, that lit up this market. And now we are pricing in rate cuts that start in May, despite the fact we had just heard from Powell, who said we might need to hike again.
Yeah, I mean, that was him essentially jawboning, wasn't it? We'd all got a little bit too over our skis. We got a little bit too premature. That takes us to the tweet from Jim Bianco over the weekend, where he looked at the Goldman Sachs index. I thought it was a bit cluttered for a Monday morning. No disrespect to Goldman Sachs, so I thought we would go with a much purer form of the chart. Of course, it's the work function. Where are you going to be with rate cuts by the end of next year? And that is 118 basis points, 120 basis points, more or less. Bianco has looked at the FCON chart from Goldman Sachs, and essentially what you had in November, more or less, was the effect, a loosening, a louchening of, is there such a word as louchening? A louchening of there is now, there you go, we've christened it, of financial conditions, the equivalent of 90 basis points. Go on the Goldman Analytics team. Danny, good morning. It's all a little bit too much, isn't it? Loushness. Was I louche over the weekend? Maybe a glass of mulled wine.
I don't know. We're going to start selling some Bloomberg Brief swag, where one of them will be a Manus Cranny dictionary. But Manus, the issue is that the Waller cat is out of the bag, right? He spoke about this idea that if inflation keeps coming down over the next few months, that they can indeed cut. The market doesn't care about what Powell is saying. It only cares about that narrative that it's grabbed onto.
Well, when it comes to moments of existential angst, it's who do you want to trust, Powell or Waller? I'll leave you with that thought. Monday morning, what we got? The dollar's taking a breather. We've had 3 weeks of losses. The Fed Chair, Powell, pushing back against the growing expectations of this series of rate cuts beginning next year.
It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease. We are prepared to tighten policy further if it becomes appropriate to do so.
Which story is Peter Kinsella buying, or selling that for that matter this morning? Peter Kinsella, Global Head of FX for Strategy at Union Bancaire Privé, selling dreams to the world. Now, whose dream do you buy? Do you buy Waller, which is get ready for rate cuts, or do you buy the pushback from Powell? Because the market is way ahead of Powell. Good morning.
Good morning, Manus. On this one, I'm probably a bit closer to Powell rather than Waller for a few reasons. I think that if we look at globally speaking, not just in the States but elsewhere, we're definitely seeing a pretty significant disinflation trend, and essentially speaking, inflation falling but much faster than expectations. And that's clear across the board. However, if we look at the data in terms of activity data, particularly in the States, it's still relatively robust. So I think certainly for now, I think the Fed is done. That's definitely unquestionably the case, as are the other major central banks. However, it is a bit premature to price in rate cuts, particularly as quickly as as Q1, let's say. I think for us, really in UBP, we think it's really a second half of the year story vis-a-vis rate cuts. But that's really where we're going. And certainly, if you think about it, looking at a 10-year bond yield at 4.25%, where does it really go to in a Fed rate cutting cycle, right? Particularly if core inflation remains relatively robust, there's not really a great risk reward from buying 10s here, I think.
Peter, so I know you think 2024 it's going to be dollar weakness, but given what you're saying that the market is maybe prematurely pricing in cuts, is that all in the second half too? Is first half maybe dollar strength to unwind some of the cut expectations?
That's probably fair. Look, I think if we look at where the dollar's trading at the moment, it does trade a little bit too weakly relative to G10 rate spreads. So I think coming into year end, there is some scope for the dollar to appreciate very modestly. Over the course of next year, you've basically got Q1, it's really all about inflation, what's happening in growth, etc. The second half of the year, it's big political risk, right? We've got Donald Trump, we've got everything else. So there's really a huge kind of quantity of uncertainty, in the second half of next year. And judging that's going to be tricky. But overall, I think a modest weakening trend is pretty reasonable, all things considered.
Oh, we've got a whole year of election frenzy to get through. I can't wait for it being here for an election cycle. Now, look, at the start of last year, your highest conviction trade was to be, at the start of this year, excuse me, I've already got through New Year's Eve. your biggest conviction trade was to be long yen. I mean, that was the most unreliable boyfriend of it all. They changed a little bit of YCC. They didn't really shake the tree that much. We've had a 4% rally in yen. But I look at the shorts, and they're the highest since April of this year. Do you double down on your conviction, Peter, that the yen will rally? And if it does, does that get a tailwind from this dollar weakness, presumably?
Yeah, I think that's probably a fair thing to say. The yen was definitely kind of a very, I would say, high conviction call from myself and indeed other banks. It didn't work for a variety of reasons. The BOJ was just basically too slow and too easy in terms of their tightening policy. However, next year, obviously, we're likely to see a raise in the deposit rate. And I think as well, we're likely to see a decent inflow story, particularly towards the Japanese equity market. That's becoming a big consensus and indeed conviction call from several banks, not only ourselves. And so I think that's going to be enough, with a tailwind of dollar weakness and lower US 10-year yields. That's definitely enough to bring dollar yen back to sort of 140, even 135 by the end of next year. So I think having that long yen bias, to my mind, makes an awful lot of sense, all things considered. And the valuation is very, very compelling, right? The yen is trading at its weakest ever level in real effective exchange rate terms, trade-weighted terms. Every metric you look at, it's just phenomenally cheap. So if you're doing your Christmas shopping, Manus, get yourself over to Tokyo. You'll get a good deal.
Wait, Peter, to be clear,
yeah.
I was going to say, Manus is buying me gold for Christmas, right, Manus? Isn't that why we're rallying right now? Because of all the gold you've bought? Rose gold. Oh, I am a rose gold girl. Manus, you know me so well.
This program goes off the wheels on a Monday morning, Peter.
Yeah, very easily.
Buy your snow chalet. The trade is sell your Gestad chalet and buy yourself a Japan snow loft. There you go.
Yeah, I like that. I like that a lot. Hey, Swissy, speaking of which, Peter, Swissy, what say you? Where do we go from here?
So, on balance, look, I think we're getting much lower inflation in Switzerland. So, I would expect effectively in a flat profile to modest weakness over the year. Again, the problem is geopolitical risk. It's so elevated, you don't really want to be short Swiss in that environment. But I think certainly for investors who have multi-currency portfolios, getting out of sort of yen loans into Swiss loans, to my mind, that makes a lot of sense.
Okay, well, I have a feeling we're going to be talking a lot more about this in 2024, which is right around the corner. So, Peter, if we don't see you before then, enjoy the holiday season. Thank you very much for joining. That's, of course, Peter Kinsella of Union Bancaire Privé. All right, Manus, let's get to some of the other top stories that we're tracking and are trending on the terminal this morning. China's Evergrande has won some breathing room to strike a restructuring agreement with creditors after a Hong Kong court again pushed back a decision on whether the property developer should be wound up.
The fallout from Credit Suisse's AT1's bonds widens after several Japanese investors sued the brokerage arms of SBI, Rakuten, and Monex.
Spotify, meanwhile, said it will reduce headcount by about 17%, at least the third time this year the streaming service has cut jobs. CEO Daniel Ek cited the rising cost of capital and slowing economic growth among factors.
Well, coming up, it's day 5 of COP28. The focus? Show me the money. It's finance. We'll bring you our conversation with the Dutch Finance Minister and Deputy Prime Minister, Sigrid Kaag. She joins us in just a moment, live from Dubai.
All right, and it's M&A Monday. Roche agrees to buy obesity drug maker while Alaska Air is buying a rival airline. We're also going to have all of the deal news for you on this Monday morning on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next...
had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Now, over in Dubai, today is Finance Day at COP28. The Climate Loss and Damage Fund is still high on the agenda. The summit has seen some early wins so far, but there, of course, still is skepticism. Bill Gates, for his part, says the world probably won't meet the Paris Agreement's goal of keeping temperature rises below 2 degrees Celsius. Joining us now to discuss climate and finance is Dutch Finance Minister and Deputy Prime Minister Sigrid Kaag. Sigrid, thank you so much, Minister. Thank you so much for joining us this morning. It's a unique COP, especially today. It's Finance Day. We're going to have the most bankers ever, as well as the most oil executives at a COP28. What do you think so far is the most significant achievement there in Dubai?
Well, I think we're not there yet, but I think a big breakthrough was, of course, the formal adoption of the Loss and Damage Fund with some early important pledges. My country has also made a pledge according to what's sort of our capacity. And I think that's an important breakthrough. But the end of the negotiations will determine, of course, how successful this COP will be. But I'm quite hopeful. It's a tough COP. Given the data we have, given the science and the dramatic effects of climate impact we can see in many places in this world. So the time to act is now, and financing is a key and essential ingredient.
It is, and that loss and damage has been an ongoing point, and the financing has been incredibly important. 50 oil and gas producers committed to cut emissions, but none of them have agreed to reduce oil and gas production. I mean, is that just an admission that there is no enforcement? It's a reality check. You've got to live with fossil fuels. You've just got to do a little bit better on emissions. It's a reality check, isn't it? It's not a commitment.
Yeah, well, yes and no, I would say. I think here the Secretary General has been very clear in some of his statements yesterday, Antonio Guterres, in demonstrating or telling and challenging the sector to say commitment is one thing, benchmark it and tell us by which point. At the same time, governments, and particularly ministers of finance, need to create the framework, the taxonomy and the regulation to both incentivize but also accelerate the energy transition. So it's not just the sector itself. Governments also need to play a leading role.
And this is, of course, a global conversation, Minister, but there's also the shock of back home in the Netherlands of PVV and Geert Wilders being the big winners of the election night. Now, their platform itself, it's to leave the Paris Agreement, to dismantle Dutch climate law, to get rid of some of the renewable energy efforts. How much of that, Minister, do you think they'll be able to achieve?
Well, honestly, I don't know. I've been the outgoing party leader for the Social Liberal Party, and for my party, it's been very clear. We will never join a government that's led by Geert Wilders because of his platform, because of agenda of hate, discrimination, demonization of political opponents, and more broadly, we consider many of these aspects basically running against our constitution.
But Minister,
if you look at the foreign policy agenda or international cooperation agenda, it's a big tally. How realistic all that is, I don't know. It depends on the other parties he is willing or hopeful to negotiate with.
Well, let's just touch on that. I mean, do you think, how willing or desperate, as the case may be, depends how you look at it, will the others be to join him in a coalition? Are you confident that he will be Prime Minister? How long will it take him to seal that deal? What is your thinking? You've been in politics a long time, and you've seen those corridors of power in the Netherlands.
I honestly don't know, because this is quite an, I would say, an unexpected outcome of the elections for many. And 77% of the Dutch population did not vote for this party. That's very important to remember. Now, the formation of coalition governments in the Netherlands in recent years has been very long, given the fragmentation of the political landscape, the multitude of parties, and the very divergent views. So it could take a while, but you just never know, because at the same time, the challenges politically and for a new government are such that no time can be wasted.
For the more radical elements, things like Brexit. I mean, I'm here in the UK. Manus lived also in Brexit in the UK. We all lived through that, and it was widely underestimated, the likelihood of that happening. Do you think the Dutch population, those in power right now, perhaps underestimate the likelihood that that could happen to the Netherlands?
That's always a risk. Here, I believe that the majority of citizens and companies definitely know, also with the example of Brexit in mind, let's face it, know where our interests lie. As an open economy, we benefit the most of intra-European trade. Our wealth is built and derived on this, certainly in modern history. So it would be very foolhardy. But then again, many of the elements of the program of Geert Wilders go beyond the pale. An end of the military support to Ukraine, end of any form of international cooperation, and. It's a very long list. So I think that's also where the challenge lies. Yes, he won the elections. At the same time, many moderate parties, be they center or right-wing, will be looking for the avenue where it's acceptable from their own conscience or constituency to form a government. I think that's the challenge.
Well, many would say that that's, you know, the cocoon that many lived in Westminster and in other countries, which is you didn't see him coming, and 33% of the country did, and they voted for him. And the expectations are that he could pursue, as you say, some very extreme policies, very radical policies on migration, etc. From a finance perspective, which is your domain, you know, what is the biggest risk to the Netherlands, to financial markets, and I suppose to country risk from his accession to power? What is the prime risk, Minister?
Yeah, well, I think two things. He gained 23% of the electorate. At the same time, we are a country, like any country, where governability, predictability, and soundness of policies are, of course, valued by the markets. I think the indication that, for instance, it'll be harder to hire foreign labor, expatriate labor, or where the people of color still feel as welcome as expatriate labor in the Netherlands, these are all factors that will weigh, I believe, on the decision-making by companies. So it's upon us, as moderates, be they from left-wing or right-wing parties, to really project what is the direction of travel and also what is reasonable and in the interest of the country. Companies will have their own pitch when they look for foreign direct investors, but we also need to exude the areas we find important, from values to economic choices.
Speaking of companies, your ministry just announced plans to sell shares currently worth about 1 billion euros in ABN AMRO. The plan, as we understand, is to take your stake to about 40% from 49.5%. After this, what is the most expedient way to get out of ABN AMRO? Is it something that's piecemeal, or would you consider a serious offer, for example, from another bank?
Well, it's good practice from our side to not comment on that publicly, but so far actually the execution of the sale of the shares, of the government shares in ABN AMRO are carried out by the NLFI, and they have opted for an approach where this is done in a piecemeal manner. But each phase is measured and weighted on its own merits, and we don't communicate on that publicly until the decision is made.
I mean, just very briefly, you're on your way out. Surely you've got an opinion. Fill or kill, sell this asset, get it off the books.
They're not my shares. They're held in trust, and I have to do what's best for the country and the taxpayer.
Beautifully contextualized, Minister. We wish you well. Enjoy the rest of COP. Keep a hold of the purse strings. From Danny and I, we wish you well, and everybody at COP 28. The Dutch Finance Minister the Deputy Prime Minister, Stephen Koch, joining us from Dubai. So, Danny, of course, that was beautifully put, which is they're not my shares, they're held in state. I just thought we'd sort of try and sort of finagle that out. But it's interesting that she talks about the risks, the responsibility of the left and the right and the other parties to push back perhaps against some of these more extreme policies that Geert Wilders indeed may get into power with.
Yeah, and I got to say, man, it feels like very of the moment right now. There have been other elections where we've seen things swing far right, but even besides that, there's a lot of concerns, at least for our audience, for financial markets, about the sustainability of financial trajectories. We were just speaking with Peter Kinsella, and one of the parts of his bearish dollar outlook was the elections and concerns about what happens in 2024. It's a conversation that's happening in the U.S., in the Netherlands, even here in the UK. It's a concern. How do the purse strings look, whether the ministers themselves own the stocks or not?
Yeah, look, the debate today is about whether we've had this irrational exuberance in the month of November. Was it irrational or prescient? Therein lies the point. As you said yourself, I think, what was the drop in tens on Friday? 13 basis points of
13
a drop.
bips.
13 bips in the bond market. So the bond market fervently believes in the 120 basis point cuts of next year. But as Peter Kinsella just said from Union Bancaire Privé, where do you go? Where do 10-year notes go from here in the next leg? Or do you settle into this, where you settle into this new round, this new level of 410, 415, 425?
Yeah. Hey, man, speaking of selling stuff, can I tell you a story that caught my eye that we discussed this morning? So UBS, of course, is, letting folks go, trying to unwind some of the maybe more unsavory things in their view for Credit Suisse. How's this for a headline from the FT? UBS is selling the Credit Suisse jet used by ex-chair Antonio Horta Osorio. This is, of course, the one that he used to much controversy to break some COVID-19 lockdown rules, including doing things like flying to Wimbledon and flying to football matches. But there you go. I mean, they're letting go people, but they're also letting go of the jet, Manus.
Yeah, but, that's sort of very reflective of Motti. They're not, I mean, I don't know what way Motti and the senior team travel around the world. I presume they have access to a form of net jets or whatever. But this is about a signal. This is about a signal of what was historical, what was former, what the influences were within Credit Suisse, most of which are gone. Callagher told us that last week, and this could be the last vestige of, that, I don't know about largesse. I met one person over the weekend who said, when a former leader of Credit Suisse was having a swag time up on the Upper East Side, that's fine when your stock price is trading at 30, not when it was languishing in the bin at around 11. How are those markets, Ms. Berger?
Oh, well, they're taking a pause, Manus. I was just thinking about private jets. Fun fact, the Falcon 7X, which this is, other owners include Taylor Swift and Bernie Ecclestone, the former Formula One boss. Popular plane.
Of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly, we want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, you know, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, you know, who has been leading some of that research on the impact of lifestyle and dementia. And, you know, this is a promising area.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Stocks and treasuries fall after rallying against Chair Powell's pushback on market rate cut bets. Now the focus shifts to payroll data later this week. The Israeli military expands operations across the Gaza Strip and warns residents to evacuate again. Meanwhile, a U.S. Navy ship responds to a flurry of drone and missile attacks in the Red Sea. And it's a super deal Monday. Roche agrees to buy obesity drug maker Carmot, while Alaska Air takes Hawaiian Airlines. The two deals scoring a total of $5 billion. The other number you need to keep in mind is 2,100. That's where we traded in gold early in the hours this morning. Now, we did ease off that. We're down about 0.25%. We're just under that 2,100 mark. But gold did hit a rally on Friday. Maybe it's a strange rally because real rates are still high, but they have been turning. It's that direction of travel which has allowed gold to hit new highs. Again, today it is a pause. It is a breath. Do we want to continue on literally everything except Bitcoin? This thing is still rallying. We are nearing the $4,200 mark. It is up another 5%. We're on the highs for the morning. It's the same old story, not necessarily anything new here, but it's the rate cut expectations and an ETF expectation. Still unclear when we're going to get this, but the market thinks it might be soon. Finally, Manus, we're also taking a breather on the Treasury market rally. We're up 5 basis points, 4.2%. Peter Kinsella was just with us saying that there is going to be pushback, that yes, the market's going to cut, but it's likely to be in the second half. But after Friday, Manus, this market said it is going to be May that the Fed starts cutting.
Yeah, you know what? And you laugh at me sometimes when I put Bitcoin on the board when that's the alternate weeks.
I never laugh at you.
There you are, $41,768. But you're right about that bond market. I mean, it has delivered such exuberance for stocks and across the asset board. But we all have that little bit of a pause for thought in the equity market. Mike Wilson at Morgan Stanley says you're going to have better opportunities to pile into these equity markets. There's going to be more volatility. The VIX at the lowest so far this year. But there are going to be better opportunities for you to get in. Uber! You know, have you got your phone out? You can dial them up. They're now joining the big boy and girl club. Stock is up 4.3%. It was up 7% in the after hours on Friday. They go into the S&P 500, so they're joining the big swag club. So that's the state of play on equities this morning. You're going to get jolts. You're going to get ADP. Then you're going to have this frenzy as we go to Friday of what will the jobs be? What will the wages be? What will the hours worked be? And that could define whether you believe Jay Powell, which is there's a risk that we could raise rates again, or Waller, which is rate cuts could come. Stock 600 is flat at the moment. You've had one of the best months since the start of the year on the Stock 600. You're going to have snow drifts and snowstorms, so get yourself up onto the ski lifts. It's going to be a tougher week for Europe. The SMI is up 0.5%. Why? Because Roche is out there doing a deal, spending over $3 billion buying Carmot. That puts them potentially on a head-to-head race with Novo Nordisk in that obesity, in that weight loss and diabetes zone. Danny, good morning. You ready for skiing? You get a little ski in before you come and join me here in New York? Because you're not getting any holidays when you come here. None.
Your skiing pantomime is like the best thing that's ever aired on Bloomberg TV.
I'm a crap skier.
I'm obviously... I'm saying I'm saving my European ski trip to go skiing with you. I don't know, Vail, Vermont. I don't know. Where do you want to go, Manus?
You're just so glamorous. No, take me back to Zermatt. I got to say, it's the best skiing in the world.
Okay, fine. You'll visit me over here. In the meantime, Manus, getting back to the important things, I'm still thinking about the inability of Powell to jawbone this market. He said that there's a possibility they might hike, but the market still decides to rally. Bonds still continue to go. It's this question of, is the cat out of the bag? Is the Waller comments where he said that they could start to cut if inflation starts falling? Is it too little, too late? I did have that mea culpa this morning, Manus, when I called you and I was like, oh, the horse is out of the barn. And you were like, Danny, that's not the expression. It's the horse is bolted.
You can see this massive horse running out of a barn and the cow looking at it going, why were you here in the first place? Oh, listen, it's been a tough morning, but we got there. I mean, normally we wait till Friday to see whether we broke anything, but I think we're good. Let's keep an eye on these bond markets. It's going to be a big week. Jobs, jolts, ADP, lots of moments of existential angst, which of course brings us back to, it's an ongoing story, but it is grave existential angst in the Middle East. The Israeli military has stepped up its offensive against Hamas in southern Gaza as it defies calls for a ceasefire. Joining us now is Bobby Ghosh. Bobby, I was on the phone to a number of people yesterday, both in Dubai and across the Middle East, from both sides of the spectrum. Deep concern that we are facing some kind of an utter physical annihilation of Gaza, which takes it back 30 years, but that this is his last gasp at power.
Well, yes, he does represent the right wing of the Israeli political spectrum. He's leading a right-wing coalition. Many of his partners in that coalition are much farther to the right as him, and they've been openly saying things like that we need to destroy Gaza, we need to kick all the Palestinians out, we need to turn Gaza into a car park. Really inflammatory things like that. You understand that the trauma of the terrorist attacks on October 7th has raised the temperature in Israel, but some of these comments are not helping. They're not helping Israel, and they're certainly not helping Israel's supporters, most prominently the Biden administration, which is trying to rein in some of these instincts among the Israelis, which is trying to tell the Israelis, tell Bibi Netanyahu, that you need to be more conscious about civilian casualties. You need to make sure that the second phase of this war is not as catastrophic as the first was.
Okay. Yeah. And to that, Bobby, good morning to you. Thank you for joining us. I mean, we have exactly what he said. He said, in this kind of fight, the center of gravity is the civilian population. And if you drive them into the arms of the enemy, you replace a tactical victory with a strategic defeat. I mean, that is very clear language, Bobby. But what happens when you have this from the U.S. and at the same time, the USS Carney blaming Houthi rebels for attacks? I mean, it seems that they're kind of being drawn in at the same time as pushing back.
Well, that's during that truce that lasted for a few days, the attacks on American positions around the Middle East also stopped. We have to remember that there is a network of different groups, militias that report essentially to Iran, that Iran supports, along with Hamas. And these groups had been attacking American positions in Iraq, attacking shipping in the Red Sea. They all suspended their operations during the truce. Now the truce is over, they're resuming, and it would appear that they are escalating. 4 rocket attacks on 3 commercial ships, plus a drone that seemed to have been heading towards USS Carney, which is a destroyer, in that Red Sea area. This is very serious because this has enormous implications. That is one of the most important shipping lanes in the whole world. A lot of very, very important commerce is conducted through those shipping lanes. And the Houthis, who sort of currently run most of Yemen and have an enormous cache of weapons from Iran, are signaling that they're willing to use those weapons and that they're willing to attack international shipping as well as American destroyers. This is a clear escalation, and it's something that we should be watching very closely.
It's going to be interesting to see how the Middle East the broader Middle East react to this? Because this is the escalation that has been warned against several times. The markets are pretty much disregarding this at the moment. The oil markets are down. The war premium and the existential angst premium is not there in markets. Bobby, if you were to define where we are with U.S. politics at the moment, this is the single biggest risk moment for them, isn't it? This Houthi rebel attack. This kind of escalation is absolutely the last thing the Biden administration needs or wants.
Yes, it is. And we have to remember this is happening in the context of opinion polls in this country showing that Biden's policies towards Israel have been unpopular with quite a large segment of his own party. This is a president who less than a year from now will be facing a re-election. A large section of the Democratic Party, particularly younger voters, people 35 years and younger, are not happy with the way that he has embraced
with his all-out
Israel.
Support, yeah.
With his all-out support. They'd have liked to have seen a little more, something less of a bear hug. They're generally sympathetic towards Israel, but they are looking at these images of Gaza being destroyed, and it really bothers them. So for the Biden administration, this is all bad news. There's no good news coming out of any of this.
Right. And Bobby, I mean, you mentioned the escalation in Middle Eastern waters. In China, China's criticized the U.S. after an American warship sailed into the South China Sea in those disputed waters. Is this a potential escalation of U.S.-China relations?
Well, so last month, Biden met Xi Jinping. There was some signs of a thaw. We were hoping that the two countries would not be so much at loggerheads, given all the other crises that we face in the world. This is a very small American ship. It's called a littoral vessel. It's nothing like the destroyer Carney in the Red Sea. It's an area, the shoal where the ship entered, it's an area a long, long way from China's shore. China claims this as its own, but it's actually a lot closer to the Philippines, which has, I would argue, a much stronger claim to it. It's not unusual for warships to be in those waters. China chooses sometimes to ratchet up its expressions of concerns, and sometimes it chooses not to. The fact that the ship was there is not that important, but the fact that the Chinese are reacting in this way, I would argue it's an overreaction, suggests that they want to ratchet up the tensions, and that's not good news for anybody.
Okay.
Bobby, thank you so much for joining us this morning. We really appreciate you on these mornings. Bobby Ghosh of Bloomberg Opinions. Now, coming up on the show, it's M&A Monday. Roche agrees to buy an obesity drug maker. Alaska Air is buying a rival airline. We're going to discuss, but Manis, first, how's your oil markets doing?
Well, under pressure. We're going to check out those M&A stories in just a moment. Alaska Air Group bidding for Hawaiian Airlines. Quick snapshot of oil. I like the positioning of the market, but I don't like it, and I don't think the Saudis will like it. Net longs are the lowest since July. We've got quite a bearish context for the oil market. HSBC say OPEC Plus has used its last bullets on the latest supply cuts, and it's facing rising spare capacity, down 0.4% on NYMEX crude, 73.76. Good morning from New York and Monday. It's Monday. Rise and shine.
the reception, the acceptance of Porosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Porosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So a 250,000 cars in a market where there are million and million of cars every year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. And we're kicking off this week with a big M&A Monday. Roche has agreed to buy Carmot Therapeutics, developer of a weight loss drug, as the pharma industry puts seemingly all of its chips into this ongoing frenzy. Joining us now to discuss is Bloomberg's Eric Fanner. Eric, I mean, is there any major drug maker left who doesn't have one of these weight loss drugs at this point?
Yeah, that's a good question. I mean, in recent weeks, we've seen AstraZeneca get into the act. We've already had Pfizer. They're developing a pill. Of course, the big players are Novo Nordisk and Eli Lilly, which has followed it with another drug. So you've got at least 4 big ones. Others surely pondering it. I mean, it's just everybody's going for this obesity market.
Does it really put them? I looked at the number, $3.1 billion. 2.7 and a 400 million step up, as it were, on achievement. Do we know enough about this drug? Can this seriously re-rate Roche in what's becoming a very evolving market?
Yeah, that's a good question. I mean, obviously, $3.1 billion by pharma industry standards is not huge at this stage. I mean, you see this kind of thing for a small biotech often, and that reflects the fact that these drugs that the Carmot has under development are pretty early stage, right? They're not close to market. They've got a pill they're developing as well as a weekly shot. But they're still in early stage trials, so there's a long way before they could come out. And so I think people are probably speculating that they're not necessarily going to rake in as much as Novo would, as much as Eli Lilly will in the coming years. We've got to wait for those drugs to come to fruition.
Yeah, but it's a growth market, isn't it? There's no doubt about it. And pricing differentials across the world. Eric, thank you very much. Eric Fanner there. On the very latest, Roche, $3 billion deal and counting. Another deal for you to consider here in the US. Alaska Air has made a bid for its rival, Hawaiian, at $1.9 billion. It's going to be cash and debt, and that's after tourism to the Aloha state suffered since the pandemic. Joining us now, it is our aerospace and defense reporter, Siddharth Phillips. So Alaska goes after Hawaiian, $18 a share, and $900 million of Hawaiian's debt. What does it say to you about the next iteration of aviation here in the US? I mean, it's a small deal, but is it a signifier or is it a flare for what we should be looking for in 2024 across the industry? Good morning.
Good morning. So it does look like the industry in the US is finally consolidating, and that's sort of everyone's trying to take on the big 4 in the US. And with this deal, along with the JetBlue Spirit deal that was announced earlier, there is a lot of consolidation in the U.S. markets as airlines look to sort of ramp up yield and sort of reduce costs. And that's really the name of the game at the moment, consolidation.
You've written a lot, though, Sid, about how federal regulators have gone after these sorts of things. It was only earlier this year that they broke up JetBlue and American Airlines alliance. Are deals like this one even in particular, are the Justice Department just going to let them sail through?
It's going to be interesting to see how the Justice Department proceeds on this, given the fact that they blocked the Spirit takeover of Spirit by JetBlue, and they've sort of taken that to court now. So it's going to be interesting to see how the Justice Department responds to this. But there does seem to be a move towards consolidation in the industry, and so depending on where the government goes with this, it will be interesting to see how it plays out.
Yeah, I mean, it's a sad thing because it's like, oh, deals are back, but then it's like, are they really? Is the U.S. government going to allow that to happen?
That's the billion-dollar question.
Certainly is, Sid. Well, thank you for helping us at least to kind of chip away at that question. That's Bloomberg's Siddhartha Phillip. Okay, coming up, we're going to be looking ahead to the events to watch throughout this week as this market rally takes a pause. We have a lot of big things on deck. Can the bond market, Manus, continue this rally of a drop of what, 13 basis points on Friday?
Yep, I mean, we have the doubters out there. It's whether you believe Powell's jawboning that, we're at that delicate balance between over-tightening and under-tightening, or do you believe Waller, who literally, as you said, the horse is bolted. Once Waller said that rate cuts were in the offing. Out of the barn. Soft landing, JP Morgan strategists are warning that the soft landing bets are fragile. You're looking at yields, I mean, you'd hardly call them a ruckus on the upside, 4.24%. But as Union Bancaire Privé just said to us this morning, well, where do you go from here in terms of the narrative if these rate cuts are delayed until the second half of the year? So that's how the bond markets are shaping up this morning. Small tick higher across US, German, and global bonds. SPOs are down 0.33%. Have we exhausted ourselves from an over-exuberant November? Too much mulled wine, too early, can have calamitous effects. I know. Good morning.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Names in global leadership are on Bloomberg.
What we've just delivered are significant tax cuts. For business, we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. That's an incredibly generous regime to attract business investment.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Tuesday, a special episode of Bloomberg Surveillance live from Apollo's headquarters. Join Tom, John, and Lisa for exclusive interviews with top leaders in finance, including Apollo's Mark Rowan and Jim Zelter, about the state of private markets, recession risk in the new year, and deal-making amid high interest rates. It's all happening December 5th, starting at 6 a.m. Eastern on Bloomberg. Context changes everything.
I think I know that a company like this has to be prepared to cooperate, doesn't mean always agree with, but cooperate with key government officials on regulatory issues, on national security issues, on development of technology issues. I think I know also, and this is integral to the structure of OpenAI, where the for-profit entity is itself a creature of a not-for-profit entity, that this needs to be a corporation with a conscience.
Former U.S. Treasury Secretary Larry Summers speaking with Bloomberg's David Weston on Wall Street Week. Larry Summers, of course, is a new board member at OpenAI. He's also a paid contributor to Bloomberg TV. Of course, Manus and I spoke with a prominent tech investor, James Anderson, last week, who said it's akin to 2000 and Amazon and those kinds of companies, Manus, for what tech is about to become, and that they were, you know, seriously looking at OpenAI.
It's going to be that it's going to be that battle between monetizing, having Sam Altman back inside AI. What does that mean for the next evolution of OpenAI? Is it a capital raising? Is it some more aggressive form of capital raising? Because Microsoft wins either ways, and that was the view. It's a pretty big week. We're going to get of course, it's going to the end of the week is going to be all about jobs. And in the interim, we're going to get jolts and we're going to get ADP. So we're going to get lots of nervous skittishness before we get to the final hurrah, aren't we? What have we got?
Yeah. Yeah, well, let me show you before you steal all of my thunder and tell us what's ahead for the week.
I jumped to Friday.
I love this. All right, here's what we got. Here's what you should be watching out for. Wednesday, we have CEOs of Wall Street's biggest banks are going to be testifying before the Senate Banking Committee. On Thursday, Manus, we're going to have EU leaders head to Beijing for the EU-China summit. And here's the crucial stuff you were just talking about. I say you steal my thunder, but Manus, you do it better than I do any day. Okay, we have PMI data out of Italy, France, and Germany on Tuesday, trade data out of China on Thursday, and then, yes, it is that U.S. jobs report on Friday. It's been the big bond market rally. It's historic by many measures for what November was able to put up on the scoreboards, the second best over the past, I don't know, couple of decades for November for a bond market. Will the jobs data reflect that? Because, Manus, this market has already made its mind up about a narrative, and it is rate cuts in the first half of 2024.
Yeah, it's paying for rate cuts. And just on the bonds, I mean, we've done this a couple of times. The bond market overall in November delivered 3.47% return. That took you a year-to-date return of just under 0.7%, but it was in the green. Yeah. And therein lies the point. Such a massive vault in the bond market. It went from massive bear steepening now to this bull steepening narrative. And does that begin to get challenged? The jobs number on Friday will be, I think, 150,000 is the consensus. The Bloomberg number is at 150,000. But of course, where will that unemployment rate need to nudge up to invoke a Fed move? Danny.
Manus, I have something that's going to make you very happy on this Monday morning. Bitcoin has reached a new round number. It's Manus's favorite market to track. 42,000, Manus. We have just hit that on Bitcoin for the first time since April 2022. Are we going to get the ETF? I mean, who even cares at this point? It's clearly going to the moon, it would seem.
Kathy Woods, Mike Novogratz, they're probably rejoicing this Monday morning. There's your crude market. They're not rejoicing in Saudi Arabia, 75.53.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Data has turned, right? You're starting to see soft data, hard data, inflation data, all surprising to the downside.
For the US economy next year, we think that growth is going to stall in the second half. It's not a particularly great outlook.
I'm more worried about inflation coming back and a shock to the inflation trajectory than I am to the growth side of things.
The question into 2024 will be, can we stop the cooling before the economy tips into contraction?
Even though we have a recessionary call in the first half of the year, I think that's an optimistic scenario for the economy. It allows a reset.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get your week started live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly negative on the S&P. We're down by 0.25%. On the week last week, 5 weeks of gains on the S&P 500. This Monday morning, we're not finished with Friday. So let's talk about it. TK, if that was Chairman Powell pushback, this bond market absolutely steamrolled him.
You nailed it. It's not this finished Friday. I think it's a Monday that's starting sort of sleepy, pre-holiday and all the rest. The only thing anybody's talking about is Florida State. We'll get to that in a minute. John, you're absolutely right. We've carried forward the risk-on feel. Mohammed Al-Arian publishing out on Twitter in the hour a general risk-on feel or environment. I think he's dead on.
BMO's Ian Lincoln over the weekend saying this. Powell was more balanced than hawkish, Lisa, which given the current backdrop might as well be dovish. That's one explanation.
I literally have that quote right here because I read that and it was perfect. The other one was from Pantheon Economics. Chair Powell's heart is no longer in the optionality story. He repeated it Friday, but it's no longer realistic. We are all psychologists trying to analyze the mindset of Fed Chair Jim Powell.
You come in and you see the 10-year real yield below 2%, right now 2.02%. And the prints here, they're sort of nudgy this early in the morning. But John, we are moving at light speed. This November shock that we had continues. There's no other way to describe it. I like what, again, Al-Arian says this is just a complete risk-on moment.
And never mind last month on the month. Last week on the week, we had a 41 basis point move lower on 2-year yields. Off the back of some of the Fed speak, we push ahead to Friday. You've got payrolls on Friday. The estimate so far in our survey is 180,000. And we need to talk about jobs. And one name specifically, Spotify, TK. Up at a pre-market a little bit early this morning. They're going to cut headcount by about 17%. Right. That's more than just a cut.
Okay, what's the similarity to General Motors? They're both facing a real yield. The answer is corporate executives, They have to shift now from the free money of the last X number of years. Spotify even mentions it in their comments. They're in a new financial regime that's for every company from Microsoft and AI success all the way down the food chain.
I always wonder how much this is going to be the popular excuse to cut jobs from here on out, talking about the economy. Sure, they still said that they're not immune to the fact that rates are going up and that the economy is slowing, but you have just as many companies who are saying we need to add a lot of very key tech people. So at what point is this signal and at what point is this noise at a company that has 10,000 employees and a lot of people have said need far fewer?
We got a little deal out there as well that we need to talk about, so let's do that. Alaska Air buying Hawaiian Holdings, TK. It's a $1.9 billion cash and debt deal. You can look at the move on Hawaiian, TK. You can quote that one. I think that's 181.
Yeah.
Call it 182% higher. It's a tiny. You would say Teams win stock.
On radio, the decimal point is there. This is tiny. And I've flown both. And I think a lot of other people have on the junket from LA to, whatever. But they're tiny. And I thought Steve Trent at Citigroup was really good on this in the middle of his note on the regulation and all that. I know we're going to have Helene Becker on later. Guess what? It's a 66% discount to other recent transactions looking at selected ratios. This is like desperation transaction.
I was just grateful that they're connecting the Ring of Fire. I went down a rabbit hole about the Ring of Fire and sort of this volcanic active.
Okay, you've got to explain that.
So basically, there is this entire circle in the world of volcanic action, and Alaska and Hawaii are both part of that, and there are a lot of similarities in the land, and I was very excited that they could get
That's the rationale for the deal?
That's my rationale. I was excited to see that.
Okay, here's another deal, potentially, and I stress potentially.
It's a CFA level 4.
Earlier this year, we had a massive deal for American Oil. Exxon, Pioneer, might get another one, a smaller one, from Oxy and Crown Rock. This according to people familiar with the matter. These two are in talks. Occidental's a little bit lower, Tom, down by about 0.5%. This would value Crown Rock potentially. I say potentially because there is no deal to talk of yet, just talks. But maybe a deal valued at more than $10 billion including debt.
It's the guys following private jets around. Where was it? Over the weekend, Saturday or so, they decided they saw the Oxyjet twice in Omaha.
Yeah.
Is a major shareholder of Occidental. I mean, Occidental, some good things here. They took out Anadarko. That was really, really successful. This is a very different transaction. There's a sidebar here of some Republican politics by the principal owner of Crown Rock. So, it's something to follow. But again, it's this roll-up. Is it a zombie roll-up? I don't think so. But energy, look at energy's underperformance in November.
This is how you stay competitive, TK. Yeah. You've got to get that scale, which is what Exxon and Pioneer are doing. We'll come back to that if we get some news for you. Let's start with the scores on the S&P 500. Slightly negative on the session. We're down by 0.2% on the S&P. We've got a reset in the bond market. I know yields are higher this morning by 5 basis points, but there it is, a 10-year lease of 4.2433.
And when does it start to signal something negative for equities? We'll talk about that. This whole week, though, feels like a drumbeat to Friday, which is the drumbeat to the non-farm payrolls report. In labor market news, we get the October JOLTS report tomorrow. We get ADP, which no one cares about until they do on Wednesday. Thursday, initial jobless claims. And Friday, what is going to be the bigger surprise for markets if you get an upside or a downside surprise for the non-farm payrolls number? In central banking news, you both will be happy to know that the Fed is in a quiet period ahead of next week's meeting. We do have a couple of the ECB speakers, including Christine Lagarde, today at 9 a.m. But really, the main thing is going to be the Bank of Canada in terms of central banking news on Wednesday, their rate decision. And to me, they've been a leader, actually. So I think that this could be telling in terms of where the balance of risks are.
I never know whether to take you seriously or not.
Well, Canada has been important recently. Okay. I'm just telling you that. It has.
Are we doing Canadian auctions later this week?
Consumer spending. Tuesday, we get ISM services. Thursday, change in household net worth and consumer credit. Friday, the University of Michigan sentiment survey. Michigan, up there, Canada.
When I first moved here, about 8 years ago.
Michigan was in Canada.
Wait, no. I would say things like, should we cover the Canadian data and the central bank decision? And I was told by a bunch of Americans, no, we don't care about Canada. We don't care about Canada. And that was my takeaway.
I'll be honest.
We don't care about Canada.
Nobody cared about Canada.
They do now?
Except that they recently have looked at it as actually a leading indicator. I'm not saying it will be. It's a quiet week on central bank front. I thought you guys would be happy to hear that news.
We got to get to our extinguished guest here, but we can go into Canada later why it matters. It matters.
Do you want to do BAMA and FSU now?
No, I think we should wait. I mean,
I don't get how you can go unbeaten the whole season and not get in the playoffs.
It's just a disgrace.
Because there's a committee that decides that another team is better.
I was watching London football, seriously, and you guys are watching Bama.
And I'm just saying, I get all these complaints about European football. I don't understand the rules, all of this stuff. And then I find out in college football, there is a committee that can decide that even if you are unbeaten for the season, there's another team that's better than you, so decides the place. I get it. Bama beat Georgia, TK, and that's a big win. You win the SEC title and all of that good stuff.
I thought Chuck Todd over at NBC was very eloquent on this. He's a Georgia fellow and is steeped in it. And it's an absolute outrage.
It's kind of bizarre, right?
There's no other way to put it.
More on that a little bit later. Joining us now is Tony Dwyer, Chief Market Strategist at Canaccord Genuity. Tony Dwyer with nothing to sell. Tony, you say this, and I think it's interesting, it's refreshing. The big call for us going into year end is there is no big call to make. Tony, just explain that a little bit more.
Well, the title of the note was Chillax. So when you look at the kitchen behind me, that comes from my teenagers used to come in and they do something that they thought was fun and I thought was outrageous. And they would say, would you chill out or would you relax? And so we got the family thing of Chillax. And I think that's what investors need to do after the markets had this. It was an identifiable catalyst off that October 27th market. You had an extreme historic oversold condition coupled with, real catalyst. You had a bond market, unlike today, spiking to 5% on the 10-year with a Treasury refunding coming up, a Fed meeting coming up, and a payroll data point coming up all in the same week. But the move we've had has pretty much met the parameters of what happens in the fourth quarter of a pre-election year, what happens after 3 negative consecutive months of August, September, October. So we've had the great rally, and now it's just kind of a chillax.
What do you make of the fact that, yes, you might be saying chillax, but a lot of this has been driven by the bond market and people are hearing what they want to hear and psychoanalyzing what Jay Powell really means rather than what he's actually saying?
Lisa, a month ago, the bears are totally right. The bond market was telling you inflation's going to spike and the economy's too hot, and that was wrong. So am I supposed to now believe, because the bond market's collapsing in terms of yield, that that's telling us that something's correct? I think the problem in the marketplace here is the market has a move. We get the tail moves us so that we have a narrative that's now based on the move when the prior moves were wrong. So I think your word psychoanalysis is great. It's been my belief this entire year. I have not changed our view that we're going to see a recession. And at some point, which I think we're at that point, inflation's not the problem. The core PCE peaked in February of 2022. So it's accelerating to the downside. Inflation's not the problem. Earnings growth and economic activity, I think, is the problem.
Tony, your arch call as a recession means get out of stocks. How do you actually execute that call? Do you have to wait for an NBER recession? How do you declare Dwyer recession so you go sell Microsoft or Apple or whatever?
Well, we have to define the market, Tom. Again, I know we talk too much. These stupid sayings we have, Mag 7, whatever they are. The top 10 stocks currently account for about 35% of the S&P 500, which is it's a historic level of concentration in the marketplace. So to say that, when you say sell the market or buy the market, I think it's very important for people like me to categorize what they're exactly talking about. In a world where on October 27th, you had the Russell 2000 down 33% from peak and the KBW Bank Stock Index down 51% from peak, that is discounting some degree of a recession already. Obviously, the top 10 stocks are not. So at this point, a recession would be a further worsening in the unemployment rate. I think we're there. The Somme rule hasn't kicked in yet. But, my buddy Darda over at MKM has a good one where within 9 months of the cycle low, if you've moved up to 0.5%, you're in a recession. So I think the whole positive story here, Tom, has been about the consumer's okay because employment is full. If it's not, that story changes.
Well, let's channel Michael Darter here because his dogs are very chillax. There's no question about that. Tony Dwyer, I want to look at Darter's look at nominal GDP, which goes right into revenue growth. Are you looking for subpar revenue growth as a driver to tepid stocks given recession?
I am, and we have been. I think it's very unlikely we're going to get to that 245 number that's out there for consensus for S&P operating profits next year. So that if you look at the actual trajectory of revenue, it's coming down. We're still at a double-digit margin. But again, that's because of the top 10 stocks. Last August, when inflation's ramping, the Fed's doing 75 basis points at a clip, and everybody got bullish, that was the time to be super negative. Now it's the time where we're looking for the opportunities, because the average stock has gotten so beaten up throughout the last 2 years that a significant sustainable drop in yields is the only thing that we can see that'll kill the zombie.
Tony, I've got to squeeze this in. Gold, 21.35 in today's session, pulled back since then. But what is gold picking up the scent of?
Gold is the worst thing I'm calling. So I'm horrible at gold, because to me, unless you hit somebody in the head with it, I don't know what you can do with it. It's not like you can shave off things and spend money with it, but it is absolutely caught in a bid. Every technician in the world sees the breakout to a new high. It's clear. You know, what we've found is that momentum can continue. Typically when I wouldn't chase it, but again, like I said, I'm just not good. I've seen the gold move in different directions based on interest rates and based on currency moves.
Yeah.
So it's very difficult to really ascertain, like, it's telling me something. I'm very cautious about the markets telling me something. What was it telling us October 27th in stocks? Right now, what's it telling us now? And at the end of the day, I think we just have to, once you've had a big move, chillax, get the data and wait for that next extreme for the next move.
We're so chill, Tony. Tony Dwyer of Canaccord Genuity. Tony, appreciate it, buddy. Thank you. Got some headlines dropping across the Bloomberg on Spotify. Those headlines are written by the class of 2023 over at McKinsey. They're going to optimize office space. Optimize. We can talk about those headlines in a moment. Spotify still positive, 1.67% from New York City this morning. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Tuesday, a special episode of Bloomberg Surveillance live from Apollo's headquarters. Join Tom, John, and Lisa for exclusive interviews with top leaders in finance, including Apollo's Mark Rowan and Jim Zelter, about the state of private markets, recession risk in the new year, and deal-making amid high interest rates. It's all happening December 5th, starting at 6 a.m. Eastern on Bloomberg. Context changes everything.
I want to make it clear, the right number of civilian casualties is 0. And clearly many thousands have been killed and many more thousands have been wounded, and now more than 1 million are internally displaced. We're aware of that, and we know that all of that is a tragedy. We grieve with all those families. That's why we continue to work, as Secretary Austin said, with our Israeli counterparts to get them to be as careful and as precise and as deliberate in their targeting as possible,
That was John Kirby, the US National Security Council spokesperson, speaking on Face the Nation on CBS over the weekend. It's a subtle shift of emphasis over the weekend by this administration. This quote here by the Vice President of the United States, Kamala Harris. President Biden and I have also been clear with the Israeli government in public and in private many times. As Israel defends itself, it matters how. This quote goes on to read the following. The United States is unequivocal. International humanitarian law must be respected. Too many innocent Palestinians have been killed. Frankly, Tom, the scale of civilian suffering and the images and videos coming from Gaza are devastating.
It increased over the weekend. I was absolutely thunderstruck by the shift, a massive shift, John, from previous weekends when we sort of, stop our business world and focus on this tragedy. What I did is I got out the map. That's what I end up doing on this. It's back to my childhood. You got a 24-mile coastline, and Lisa, I'm not really sure I understand the geography, the demography of North and South Gaza around the pregnant question. Okay, push them south. Where do they go?
Yeah,
into the sea?
Well,
I don't know.
A roving kind of target as they drop leaflets. There's a question here also of whether there are talks about an additional pause in fighting. The U.S. evidently is trying to double down and reignite some of those talks between Hamas and Israel. Again, though, to me, it feels like nothing is getting that resolved. And the bigger question now is, what is the ultimate goal? And how clearly does Israel need to
I think they stated their ultimate goal. I think Israel, I saw a number of headlines in the zeitgeist, which is they look at this to be a long event. I'm not sure what that means, John. And to me, what they're also doing is they're speaking to the U.S. and to our allies about their belief. And over the weekend, it was harsh.
I think we have to preface every single conversation about this with the following. This is so complicated. Yeah. So there is always a risk of oversimplifying things. The objectives for Israel haven't changed. We'll be clear about one. Two, the emphasis has shifted from this administration because of the division, apparent division within the government, within the administration, between the State Department, without a doubt, and within the political party and the party in Congress. So you see that shift of emphasis in the language from Kamala Harris, Tom, over the weekend. And also the talk of a post-war Gaza, what that looks like, how many resources we need and what needs to be strengthened after you've destroyed Hamas, if you can destroy Hamas. So TK, where do you begin, where do you end? I think we have to begin with a shift in emphasis by this administration, this White House, over the weekend.
Our shift is to talk to people well informed on this. We are thrilled to bring in Julie Norman. The title is co-director of UCL Center on U.S. Politics, but all of our academics is on the incredibly difficult idea of terrorism. Julie, is Hamas still a viable terrorist organization?
Well, Tom, Israel is obviously trying to debilitate Hamas militarily. They have said they want to oust Hamas completely. I think as many others have pointed out throughout this conflict, Hamas is very much a resistance movement. They're also a political party. They also have their armed wing that carried out the attacks on October 7th, as well as other attacks throughout the last several decades. So they still operate in many forms. And I think even if their military capacity is debilitated, much of what motivates many of their members and motivates much of armed resistance will still continue. And that's something that Israel is going to have to grapple with and something that the U.S. is reminding them of in trying to think ahead to the day after and what some kind of end game might be.
The end game, I'm not even there yet. I'm just trying to get through the weekend as well. Please interpret for our viewers and listeners how we move on from the atrocious headlines of the weekend. Where are we in 7 days?
Yeah, I think this next several days and weeks are going to be very, very decisive and very difficult. For the last, for the previous weeks, we've seen a very intensive incursion into the north of Gaza, and many civilians, over 1.5 million, were told to flee to the south of Gaza, which most of them did. This next wave of the incursion that we're expecting will take place in that South Gaza area where people have already relocated. There was messaging to civilians over the weekend to move out of certain areas, but many people don't have access to those messages. Much of it was very confusing, and it's really just not clear where people can or should go without being targeted. So I think for Gazans and civilians right now, this is an extremely difficult time, and the operation for Israel's defense forces, if they move forward with what seems to be planned, will also be very difficult operating this kind of situation.
I want to pick up on what John was talking about, the subtle shift in tone from the administration. We've been hearing the evolution of this over the past couple of weeks in response to a lot of pushback from within the administration. How material do you think that shift is in terms of policy?
Yeah, it's a good question because we've heard actually this messaging from the White House almost from the week or two after the attacks. It was a bit more subtle at first, a bit more behind closed doors, and has become increasingly public. What I will say is, though, those initial calls for restraint from defense, from the White House, were not really taken into account in the initial phase of the incursion in the north, and it's really unclear if they will have an effect in this next incursion in the south. And I'm not even sure if Washington is aware of how much leverage they do or do not have with Israel on this. And as we pointed out, there's been a lot of change in talk, but in terms of actual real policy, in terms of support for Israel, that remains very strong from this administration and from the White House. And I don't see that changing right in the near future.
On the flip side, what's the message from the fact that we have not seen a major incursion from Hezbollah? Yes, the Houthis sent that drone over that was shot down by U.S. warships, but hasn't materially gotten involved. What do you make of the fact that it has not escalated, despite some of the pretty fiery rhetoric around the Middle East?
Yeah, it is quite notable that the main focus of the armed confrontation has still been located within Gaza. That's not to say other things are not happening. Again, the northern border of Israel with Hezbollah has been very tense with cross-border firing. Obviously, we've seen escalations in the Red Sea and even attacks on U.S. presence in Iraq and elsewhere. So it's not that other things aren't happening, but what I do think is a very concerted effort from U.S., from the allies, and even from actors like Iran to not escalate this out of control. Iran and their proxies are doing things to show that they are part of this, to kind of be in the headlines to some degree, but they could be escalating this much more. I think they're aware of the U.S. deterrence measures that are there. The U.S. definitely has been clear in their messaging that if this gets out of control, they will lean into this very hard. So right now, I think the situation is still very tense. It could still spiral upwards, but there seems to be this consensus of let's try and keep the region as stable as possible and locate the crux of this conflict into where it's most located now in Gaza.
Julie, thank you for the update from you and the team. Julie Norman there of the UCL Centre on US Politics. I promised you an update on Spotify, some more headlines for you. The first headline, waking up this morning, Spotify to cut 17% of jobs. Now, cutting costs costs money. So this is what you hear from Spotify on that. They now see this, a 4Q operating loss of somewhere between 93 million to 108 million euros. They had seen a profit of 37. So that's a change. And it's not just jobs to go. Bramo, your favorite headline this morning, to optimize office space footprint.
Oh, yeah, I love that. Instead of just saying we're going to cut office space,
why won't they just say cut?
I don't understand this. We're going to optimize office space footprint in light of the eliminations of staff roles. I mean, honestly, how many ways can you say, look, we need to lower costs, we're going to cut staff, we're going to cut office space, and we'll look forward? And how much is this basically covering what otherwise had been a pretty disappointing quarter? Because otherwise, why would they come out and do this?
The illusions to me, and this goes to streaming, which of course Paul Sweeney's expert on, is they've been giving away a free lunch for X number of years. And so they go, okay, we're going to raise the fee, and Disney's doing it and others, and they're going, the kids don't want to pay the raised fee, so they've got to completely readjust what they're doing.
Are you kidding? The kids don't care. The parents are the ones that are saying, we're not going to pay it for you.
I'm happy with Spotify. I'm happy with my Spotify.
Spotify's good.
Did you do your Spotify Wrapped?
You know.
Why did they do that at the end of November? Why don't they wait until the end of the year?
Were you really into that? Were you like excited to see what?
I was excited to see, of course, yeah.
My son was like very.
Was your one Clash?
I think it no, it wasn't. I'll show you my top 5 in the break.
Mariah Carey.
I think it was 13,000 minutes for the year.
Mariah Carey,
something like that.
But was it mostly music?
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Max Kettner, HSBC. Here's the note. Just the title. Goldilocks forever? Question mark. We'll ask that question in a moment. Equities look like this. Here are your scores on the S&P 500. 5 weeks of gains on the S&P. Longest weekly winning streak going back to June. We're negative this morning to kick off potentially week 6. We're down about 0.25% on the S&P. On the Nasdaq 100, down 1/3 of 1%. The Nasdaq hasn't had a down week since October. Just about squeezed out a weekly gain off the back of Friday's rally. Off the back of a monster move in the bond market. Forget November, just focus on last week. The two-year on the week, down 41 basis points. It's up 6 this morning, 460.21. I said at the start of the program, Pramo, if that was Chair Powell pushback, he got steamrolled by this bond market on Friday.
You quoted the Ian Lingen quote from BMO Capital Markets. It was more balanced than hawkish, which, given the current backdrop, might as well have been dovish. Basically, he gave a speech where he kind of tepidly said, you know, we're still looking at balanced risks, and people said, your heart just isn't in it. We don't believe you, and we're going to move in the other direction. And now we're looking at a 50% chance of a rate cut come March. 50% chance priced into the market.
We're going to get to it with a good guest here, but the basic idea is just the Newtonian math of this, and the answer is we're getting weaker inflation faster, not only here, John, but in Europe as well. If this was just the U.S., I'd say okay, but I'm sorry, this thing feels global.
I would say that was what was odd about the move elsewhere. And you have to have the other side of the trade in the FX market to understand it. Even with that move that you saw in bonds, foreign exchange looks like this. The euro was the weaker currency on the week against the dollar, 108.78, because we had a big downside surprise on CPI, Tom, in Europe. Inflation lower. And there's a conversation now about rate cuts from the ECB and maybe the ECB coming before the Federal Reserve.
I'm going to go back to nominal GDP, and I don't know what it's going to do for the dollar. Everybody's got their own opinion on the dollar, but I'm just looking at this global slowdown that everybody's modeling in, and for some way, a global slowdown is beneficial, stocks up. I'm like, oh, okay, that I guess.
Goldilocks forever, Tom.
That makes sense.
Further disinflation. This is Max Kantner. Low near-term growth expectations. Investor sentiment subdued. Lisa, that equals apparently HSBC. Goldilocks. The forever piece of it, I'm not sure they're on board with that just yet. I think that's just to get us to read it, right?
Well, okay, let's just be very clear. So the whole thing, the point of it, Goldilocks forever, parentheses, question mark. And so then they really dive into that question mark where they say basically nobody is expecting the Fed or any of the other policymakers to cut rates 6 times next year, but no one is willing to push back against it. So his comment is it time to push back against it now, or is it just too early? So he's kind of being, a little